But the mind moves faster. This is not luck, this is discipline. Mind pillar. Take me higher tonight. Do it all, we're chasing the light. Crypto dreams and neon skies. We rise again, we never die.
Alright, legends, welcome to another live stream. As per the disclaimer, remember, I am not a financial advisor. I'm simply sharing with you how I trade and approach the markets from a technical perspective. I encourage you to do your own research, and I do this for entertainment and educational purposes only. Let's get the party on the road. Let me switch myself on over here. Whoops. Sorry guys, I forgot to switch on my camera. Just give me a sec. All right, should be on in 5, 4. Oh, there we go. Right, legends, welcome to another live stream. Remember to smash up that like button if you haven't done so already. Let's do some technical analysis. First, I'm going to say hi to the community. I'm going to be here for a little while today. Not as long as my previous live stream because I was dead the next day and the next day after that. It took me a while to recover from that live stream. So I'm going to do a long one, but not as long as the previous one, almost 8 hours. Okay, but I'm going to be here for a while. So remember to smash up that like button. Let's see if we can catch a nice little scalp trade here together. Where price is at the moment, I'm not really interested in a trade. Okay, but yeah, on the smaller time frames, maybe there's a little scalp, because the high probability trades was already highlighted inside of the community. The long, the short from last night. Remember to pay yourself, like I always say, guys. That was shared inside of the community yesterday, because when I'm not on YouTube, I'm inside of the community. Just sharing what I do from a trading perspective. Okay. If you want to be part of the community, remember to you can send me the word access. Just the word access, guys. Not hello, how are you doing, Devil? Yeah, access. No, guys, just the word access to activate the automation bot. Okay, because I can't get to all the messages by myself. So when you send the word access, it activates the automated messages that gives you the instructions on how you can be part of the community. Right. Now, let's get on with it. Let's get on with the technical analysis. But first, let me say hi to the community. Let's go. Welcome to the live stream, Mr. 2925. Mr. Alex, have a good stream. I got a watermelon ready to eat while watching. Not popcorn this time, but I ate it all up while I was waiting. Hello, Devold. Welcome to the live stream. Alex is also inside of our community. Daniel, morning all. Francis, hello, hi. Bigger place to see. Master, thanks from Denmark. Guys, I'm going to take it relaxed, easy, okay? I'm going to go through technical analysis. I'm going to go through comments. I have a lot of time to spend here with the YouTubers today, okay? So please be patient, okay? If I do skip your comment, I'm not doing it on purpose, okay? It's a lot of comments sometimes to get through, especially when, there's a lot of activity inside of the comment section. But please, comment. It helps with the YouTube algorithm. Willifeed, welcome to the live stream. Smash the like button. Turns on the best YouTube alpha about making money. Let's go, legends. Hit that like button. Wayne, appreciate seeing you here as well. Hello, all. Who else do we have here? Rico, hello to the Master Devil. Hi, legends. Much love from Australia, all the way from Australia. Oh, yes, legends, back with another live from Mr. Devil. Let's smash up that like button for the amazing TA2 about to come. Mr. A Trader, always appreciate the mods here in the house. Mariela. I need to really stop doing that, okay? It's such a tongue twister for me. I mix up you and my... the other person's name. Okay, let me not get it mixed up, but always great to see you here in the live stream. Good morning, people in Legends. Hello, Devil. How are you? How are you, Legends? Hi. Anyone YouTube Finance? Is anyone on YouTube a financial advisor? If they have a valid license, I suppose they can give financial advice. Okay, but usually that's done through one-on-one sessions, consultations. You have to pay a fee. So I'm not sure about that one. Okay. Hi. Hello, legends. This is the channel I want to rank #1 amongst all other channels out there. Much love, Devil and Andy. Thank you so much. Much appreciated, Mr. Lightning. Or Miss Lightning. I'm not sure. Okay, Devil, can you give a Dash Coin Elliott Wave analysis, please? Because it's sideways since 2017. Okay, we can see if we're going to have time to go through some altcoins. I'm sure there'll be some time to go through altcoins. But if I do go through altcoins, I would like to go through altcoins that most people are familiar with, like Ethereum, like Link, like Litecoin, the dinosaur tokens that everyone's familiar with, the top 100. Okay, when someone writes me an altcoin that not too many people are interested in, typically what happens, because I have to cater for most of the audience. Okay, that's my philosophy. I cater for what most of the audience is interested in. I don't want to look at something that only one person is interested in, because then everyone else leaves the live stream. Okay, so if there's time, we can maybe do a vote on which altcoin you guys want to have a look at. Okay, and I'm sure Ethereum is going to come out #1 because it is the queen of all the alts. Great community. It's a great community, guys. Yes, Nightwalker, our community, in my opinion, because maybe I am biased, but I can tell you now that I do and I have belonged to many other communities as well. Before I started the YouTube channel, when I was learning trading, I belonged to so many signals channels. Okay, I belonged to so many communities. And when myself and when we started and built out this community, I wanted to make sure that we have a community that offers something that no other community offers, and we do everything better. What the other communities do really well is they provide a lot of signals without any education. They tell you where to enter, they tell you where to put your stop loss, they tell you where to take profits, okay, but it comes with no education. So they give you a fish, okay, but they don't teach you how to fish, right? So you're always sitting there wondering that, well, why are they taking that trade? What makes them believe that the price is, from a probability perspective, going to move up or down, okay, depending on what trade they are offering. And there's many signals channels out there, guys, but I have yet anyone, even people watching this live stream, if anyone has become a millionaire by belonging to a signals channel and only following the signals, let me know, because I haven't met that or heard about that person yet, okay? Because signals gets you wrecked because you don't know what you are doing. You're risking too much. You don't know how to manage your risk properly. You win a couple and you lose everything again. Okay, anyways, Devil, can you give, I've read that already. Hi friends, hello legends, let's go, Devil. Okay, you really don't have to ask the same question over and over, Mr. Path, Mathme6600. You really don't have to ask the same question over and over. Okay, let's go, ABC, WXY. Yes, in this channel, I teach people how to count to 5, the ABC in the alphabet, and then lastly the WXY. That's it. That's what I teach people, okay, in this channel. Right, good morning. Devil, can you give my god, okay, right, morning Devil, how are you? I'm great, thank you for asking. Hi, go teacher, here we go again. Okay, thanks. Aditya, do we have Aditya here in the live stream? Thank you so much for helping me clean up the comments. Good afternoon, Devil and Legends. Another channel that gives this perspective is More Crypto. Okay, pretty good at it. Right, yes. Hey, Mr. Aditya, great to see you here. Welcome, man. I haven't seen you in a while. And I just saw you deleted this message. Thanks for helping me moderate the comments. Okay. Hi, Devil. There we go. Okay, guys, now let's start with some technical analysis. Like I said, price is not really in a zone where I'm looking for a trade unless this high gets swept again. Then I will consider a short. Okay, so while price is doing what it wants to do over here, I just want to look at CVD quick. Just want to see if there's bearish CVD building up. Yep, there is. There can like to be some bearish CVD. Can you guys see this? So there's a chance. But if that high gets swept, then I'll be interested in a short. Where's my measuring tool? Here we go. From this pivot to this pivot, there's some bearish CVD building up. So if price pushes higher and there's two confirmations, high probability that if price sweeps that high, it's going to reject or make a lower high and fall down. Okay, so let's see how this unfolds. I also want to just see, based on this structure here, no bullish CVD against those two pivots. So the probabilities from a CVD perspective is that there's a higher probability to reject from the highs or form a lower high and continue the momentum here to the downside, purely based on what the market makers and retail is doing here at the moment. Okay, and by the way, if you don't know, CVD is the only indicator that I use as part of my day trading strategies. I do not use any other indicators because CVD is a real-time indicator. If you want to check it out, it's here under the free tools. If you want to unlock all the features, all the timelines, okay, the time frames, you need to sign up with one of my affiliate partners, which does have the best deals, and I will go through the deals in a little while, not now again. Okay, make a minimum deposit of $500, which is your money to trade with. and it will unlock all the features for you. You just follow the steps. Okay, so as simple as that. Right, so now first what I want to do is focus here. Okay, let me get this trade ready first. Let me get this trade for if price wants to sweep that high. Okay, because there was a nice little short that I highlighted last night to the community, and a long. Yesterday was a long and a short. It was a beautiful day. Well, the short actually only played out this morning, but I was not in front of my PC. I was doing a school run, so I missed the trade. It's okay. I'm used to missing trades, and then I sit on my hands and I wait for the next opportunity. It's as simple as that. I am still positioned in a... can you guys see this? Must I make it bigger? Let me see if I can make it one bigger. Oh, and then you can't see the... Okay, let me just leave it like this. Right. I'm still in the short from the high. It wasn't my greatest... It was a sniper trade. Okay, but it wasn't my most profitable trade here to the downside, because I used a lot of my position size to manage my risk. Anyways, but the long here to the upside is amazing. Okay, this long gave 2 opportunities to get in, and I took both of them. Right, this long was from the daily level. Price got the bounce here to the upside, which I took on Saturday, believe it or not, because I don't trade on weekends. But I had my alarm on the daily level. There was a daily level, if you guys remember. Let me switch on my daily levels. There we go. I left it there so that I can share this trade and how I entered it. So basically, there's my alarm on the daily level. It was Saturday. I was out with family, doing whatever I do on weekends, and my alarm went off. So I saw the reaction. I saw that little beautiful pullback, and oh, I love that. I love to see that. Okay, even here on the 15-minute time frame, it left those little wiki weeks behind, I think. Yes. So when I saw that, I was like, I'm a reactionary trader. I like to see the reaction. I like to see the bodies close above the trend, so I entered there. That is where I entered. Basically, as price was pulling back, I'm not as quick on my phone as on the PC, because if it was on the PC, I think I would have definitely nailed a better entry, but nonetheless, I got in. Okay, and then all of this played out mostly on Sunday. Okay, price fell down and it gave us another opportunity to get into the long. Another opportunity, and this trade I took on my 2-bit account. I was just like, okay guys, and I did send a message in the community on Saturday saying, guys, I can't always share every single trade. I wasn't in front of my PC, I couldn't update the community. I saw the reaction, I took the trade, and I closed my phone for the rest of the day. I didn't even look at the trade for the rest of the day. Okay, it was on Sunday, yeah, somewhere here on Sunday, round about this zone, where I took profits from this trade, and I de-risked the position, meaning I'm protecting the position. And then on Monday, it gave us another opportunity to get in. Okay, and that was the trade that I also shared yesterday in my video update. Nice momentum here to the upside. Beautiful trade. And then this short I highlighted last night, and it played out this morning, which I missed. That little short. And as price was falling here to the downside, you guys know me by now, I did say, please pay yourself. Okay, because that's, you know the drill. Make sure your fees are covered. Make sure your SL is at least covered. If you want to leave, depending on your trading style and how you manage your trades, leave the rest open for lower levels, because there is a chance that this short can go and claim the lows. There's definitely that chance. It's never guaranteed, and that is why I love to take profits. Okay. So on my Bluffin account, this was actually the trade that I took on Saturday. That trade I took on Saturday. I left my stop loss below that low. Took profits on Sunday over there somewhere. Okay. And then on Monday, I took that trade on my 2-bit account, not on my Bluffin account. I just left the trade here on Bluffin to say that, well, if I do get stopped out, I'm going to get stopped out with profit, so happy days. Okay. And, right, still in the short, still in the long. Whichever one gets stopped out, then I'll look for a new position. Okay, but it's not to say that I can't scalp and enter fresh trades using my, my 2-bit account or my weeks account. So now we need to analyze, well, where is the next high probability trade? Right, there is still a daily level a little bit further up. There's still a daily level. And you know me by now, when I see that, and that over there, and I see the reaction that I like to see, I will attempt a short. Simple as that. No reaction, no trade. Okay. I do like this consolidation area over here because I know that they provide resistance, but because also, can you see what happened here with the price when it hit this resistance area? Okay, it rejected. And that's where I highlighted the trade from yesterday. So yesterday, I basically highlighted this. That was the trade that I highlighted. Price was here, somewhere. I said, as price was pushing here to the upside, okay, because that was the trade that I highlighted yesterday in the community, the long. Do you guys remember the long? Of course, you remember the long. If you did take the long, why would you not remember the long? That was the long that I highlighted. And then I told everyone in the community, I'm taking profits, a big chunk of profits at the highs, okay, because it's chopping the highs. It could reject and fall down. I don't want to let a successful trade turn into a losing trade because I'm greedy. Okay, and then I told the community I need more price action for me to figure out where I'm looking for the short. So I waited and I waited and I waited, and then as price action started making sense for me, I highlighted this zone for the short, which is an alignment with this consolidation area. And also when I measure the structure from a trend-based fib extension, I get some very interesting levels. Price was struggling at the 1-to-1 extension, and I said between the 1.382 and the 1.236 is where I'm looking for the rejection. And for the swing failure experts out there, because I know that some people do trade swing failure patterns very successfully. Now that was a beautiful reaction at the 1.236, 123%. Okay, that's basically 123%, 138%, 160%, okay, so 100, 160. Whoa, I feel like Jacob Zuma, that's tripling over my word. 1.618, okay, there we go. Right, so that is the short to play the momentum to the downside. If I miss a trade, I do not FOMO into a trade unless I have a plan, okay, for a rejection. Okay, unless I have a clear trading plan, I do not FOMO into a trade, because that's my rules. That's how I trade. I do not have to trade every single opportunity. I do not have to FOMO into a trade. Okay, and now I'm stressing because I'm underwater and my stop loss is all the way above here. Now you're underwater, okay, because you people FOMO into a trade and now you're underwater. I don't have to do that. I can be picky about what I want to trade because I know there's another trade around the corner. Whether it's going to be a long, whether it's going to be a short, I don't know. But when price gets to an area of interest, I'll make a trading decision. Okay. Long gone are the days for me where I FOMO into a trade unless there's a high probability re-entry setup. Okay, like this one down here was a scary one. Okay, this long was a scary long because it came so close to the invalidation. When I take a fib from the low to the high of this structure, you can see this is where I entered. My first entry was over there because I told the legends this can be counted as an impulsive structure and this could be a corrective structure because it's such a mess It looks corrective. I don't even have to count it from an Elliott wave perspective. It's choppy, 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 overlapping structure. And I said when price got to the 786, okay, there was also a 15-minute order block. I had a 15-minute order block together with a 0.786. I entered with 1%. And then I send an update to say that if price taps the 0.886, I will add another percent to the position. But my stop loss is there. That's where my stop loss is. And it came very close. Okay. I'm sure scaring a lot of people out of their trade. Okay. And then it bounced. And another thing that I highlighted, guys, you know, this is an educational channel. I'm going to get to fresh analysis now. But this is how you learn how to do this yourself. Okay, I'm sharing with you how I update the community, because if I'm not on YouTube, I'm inside of the community, just sharing how I approach the markets. I was waiting for that break of the trend. So if you did not trade it the way that I did, I entered a position there and a little bit over there, which gave me an average entry of right over at $62,500, round number. Okay, or you wait for the break of the trend. Stop goes below the low, you enter, okay, you target the highs based on the D-line strategy, and played out to perfection. Not always the case, okay, and this is why I don't risk more than what I'm supposed to risk, because if I did get stopped out, I would have lost 2%, only 2%, and I can recover from a 2% loss. I can really recover from a 2% loss, but it's difficult to recover from a 10, 20, 30% loss. That's where things become difficult, and that's where revenge trading kicks in. Because now you're going heavier with the next position, and before you know it, you have nothing left. Okay, remember guys, I'm not a perfect trader, and unfortunately there are no perfect traders. Okay, each trader gets stopped out. The difference between a profitable trader and a non-profitable trader is that a profitable trader manage their risk so that when they get stopped out, they see how little they can lose. Right, so that was basically what happened yesterday, and then the short was highlighted like I've discussed. Ooh, what did I click? Okay, short was highlighted. And now where price is at the moment, it kind of feels like, well, yeah, that was the best short. This was the best long. It's in the middle of nowhere now at the moment. So am I going to force a trade where price is at the moment just for the sake of trading? No, I'm not really interested in a trade in this zone. Okay, I might take one for fun, maybe for entertainment purposes here on the live stream. Okay, but I'm not going to go in heavy and risk my entire account and blow a hole in my account. So I will see if there's a trade that makes sense. But I mean, if there was a trade that I was going to take, it would have most probably been that one. And now I missed that one as well. So if I go here on the 5-minute time frame, if I had to take a trade today, this is most probably the one. A little long, okay? But it happened so quickly, so I'm not sure if I would have been able to catch it. You target the high of the D line, stop goes below the low. Trade is already nicely in profits. Okay, it's hitting resistance, and that's definitely a profit-taking area for me. If I had to take this long, that, ladies and gentlemen, is a profit-taking area. You can see prices rejecting at resistance. Okay. And this is usually also where I start, you know, de-risking my position, taking profits. Anyways, it's missed now. It's a missed trade. Okay, I can't FOMO into this long now. It doesn't meet my trading rules. Okay, so I have updated my trading journal. Just for the sake of transparency, I have updated my trading journal with yesterday's trade. It's still running. And then this short is still running. Not the greatest short, but profits is profits. Okay, can't complain. This short is still running. The long that I took on my 2-bit, I didn't include here yet. I need to include that one as well. It wasn't a big trade, guys. It was $1,800. Okay, my 2-bit account is not as big as the Bluffin account. But I mean, in comparison to the portfolio size that is in that account, it's a significant amount. Right, so far, so good. 3 losses. since the 1st of July. We are now in August, 1st of August. I took this long, which was on Saturday, and it's still running here at the moment. So I left a runner, guys. I did take a big chunk of profits already, and I left a little runner. So if I get stopped out, that's the profits that I will be stopped out with. Okay, because I see some people still don't understand how the exchanges work. Realized P&L is profits that I've already taken. It's mine. This P&L over here is unrealized P&L. It means that that is money that is still on the table. That is not mine yet. So I can lose all of this, but that is mine. Okay. Anyways, I want to I need to protect that position, which I forgot to do. Okay, but I mean, it's still a small little loss. I need to protect that position, which means I'm putting my stop loss slightly above my entry. Okay, which means I don't lose anything if I get stopped out. I get stopped out with my profits. Great position to be in. Same with the short. It's already protected, already took profits. Okay, so what can happen here at the moment? Yeah, that still looks corrective. Anyways, I want to now, before we dive into this, I want to focus on the higher time frame first. Okay, just to see where are we. So obviously, if price moves up, okay, I have two zones that I'm interested in a short. This level, because this one has already been claimed, okay, where I want to basically see that over there, 1.382, and then the 1.618 at that daily level. That's where I will consider a fresh short. Okay, either this one or that one. I just want to see something here from a structural perspective. It's also the 0.786. So there's a lot of confluence going on here. Can you guys see the confluence? 0.786, 1.618 from a trend-based fib extension perspective, daily level. Okay, there's a lot going on here where I will consider a short. I do think that this, if price had to punch here to the upside, okay, I do think that price could leave a long wick behind. And I will explain now on the higher time frames what could happen here. Okay, let me switch on this different level. And I'll be prepared for that one. Is something that happened here. Do you guys remember that? Almost took the low. I think this is something that could play out over here as well. Price could really punch here to the upside. Okay, let me just clean up the kitchen. Okay, if this had to happen, price punches here to the upside, taps the 0.9, rejects, leaves a wick behind on the higher time frame, specifically the 1 hour time frame, but it starts trading back below. That's a sign of weakness. Okay, I know where to put my stop loss. I know the sign of weakness, and there's a chance after this rejection, almost claiming the high, that price can fall down and claim the lows again. So I don't have to go in heavy with this position, knowing that the risk to reward can be massive where price takes the low. And I'll explain why this level is so significant based on this structure. Okay, that is where Elliott wave theory comes into play. Right, but from a confluence perspective, definitely attempt it over there. It doesn't have to get there. Okay, if I see the reaction there, that's where I basically want to see that over there, so I can execute my swing failure strategy. Okay, I have not touched on Elliott wave theory yet. Okay, I do not need Elliott wave theory to trade. I use it as an extra layer of confluence to determine probabilities, because this trade was executed based on probabilities. Okay, because I really struggled to count this structure as a clean, simple 5-wave structure to the downside. And because of this structure, I knew that there was a high chance, never guaranteed, a high chance for price not to take this low and to take this high again. And I'll explain that on the higher time frames. So I knew that this was a scary, scary trade yesterday, but I stayed in that trade. I added at the 0.88. I highlighted this trade inside of the community, and I didn't chicken out of the trade. I just knew that there was a high chance for price to not take the low and to take that high again, based on this damn structure. Okay. And probabilities played out. So let's see how the rest of the structure unfolds. Okay. And let's go through a couple of examples or a couple of scenarios. Okay. So I can now delete this daily level. I know I'm stuffing around here on the 5-minute time frame. Bad. Okay. Let me take this out the way. This daily level has now been tapped twice already, so it's no longer valid. Okay, if I go to the daily time frame, just want to make sure that I have all my levels marked out. You can now see how powerful these levels can be. Okay, especially if you are an SFP trader. These levels are very powerful. Okay, still valid, has not been claimed. This one has been claimed, so not valid. Okay, this one's still valid, hasn't been claimed by price action, and then this one, okay, not valid anymore. This one also not valid, has been SFP'd. This one SFP'd. Okay, so these are the only two daily levels in this range that are still valid. Unfortunately, I could not find any point of controls. Okay, I want to see if there's a weekly level. Let's go to the weekly time frame. Let's switch off the daily levels. Okay, now you can also get a feel for how I look for these levels. A open and a close at the same level, and it has not been claimed by price action. Like this one has been claimed by price action. Okay, so I can't use it. This one is fresh, was basically formed on Sunday, and this one I can't use because this week is still busy forming. Can't use that one. So the only weekly level I have is at $65,000, 375. And then there's a weekly point of control that has been tapped already. I'm just leaving it there because I know it can offer support. And you can see price is currently trading above this level. So that could be in the short term be a sign of strength because it doesn't want to lose the weekly point of control. And basically the weekly point of control is during this week, where was the most amount of volume traded? It was there. And price is now trading above. So usually that's a sign of strength. Not always. Okay, just want to make that clear. If I go to the 1 hour time frame, now I'm looking for naked point of controls inside of this range. Do we have any naked point of controls? I don't think we have. Okay, the only naked point of control I have is a little bit further up. It's a little bit of a zone because there are two levels there, so I gave it a zone, and further down. So the only naked point of controls I have is above the range and below the range. Inside of this range, I don't see anything. No naked point of controls. And I can prove it by showing you. Okay, if I switch on my session volume profile to show me each day where the most amount of volume was traded, well, I need to zoom in a little bit to show you. Okay, I need a line like that, a red line that has not been tapped by price action. That one got a beautiful bounce to the upside. It's been tapped. This one tapped. What a beautiful bounce to the upside. You can see how powerful these levels are because I had this level and I traded. I think I traded that long if I'm not mistaken. Tapped. Tapped. Not valid, not valid. Tapped. There's nothing, guys. There's nothing. I don't see anything. Tapped. Okay, there's nothing. Right, so now I have to be a little bit more creative. If there's no naked point of controls, I have to be a little bit more creative. Then I look for ranges to find point of controls, not naked point of, just point of controls. A naked point of control is those lines that I've just shown that hasn't been claimed. I call them naked. There's no naked point of controls. But now I have to be a little bit more creative. So what I usually do is I go to the 15-minute, 1 hour time frame, okay? And I go look for areas where a lot of volume was traded. And now I do this manually. There's a consolidation area. So I look at this consolidation area to see where the most amount of volume was traded. And then I can insert a line and say, okay, now that is just a point of control. It's not a naked point of control. Okay, inside of this little zone here, okay, you'll find inside of those consolidation areas, it has little red lines, and I can play SFPs from those lines. So what I'm trying to demonstrate over here is that if I can't find anything, I can go manually look for them. Okay, because I know from a price action perspective, these little consolidation areas, okay, consolidation area, consolidation area, consolidation area provide resistance when price is below, and they provide support when price is above. Okay, I can show you here on the 1 hour time frame when I do a bigger one. Okay, I'm doing exactly the same thing, but just with a bigger structure. If I look at this entire structure, where did price bounce? Here, there, at this high volume node. Look at that. High volume inside of this entire range. Okay, this is where price bounced. So I'm now doing it here on the smaller time frames inside of those mini consolidation areas, because I know that's where price could reject or bounce, depending if I'm looking for a long or a short. Okay, so let me just make that thinner. There's a little, it's the closest point of control to the upside. So if price does push up over here, I'm looking for a short in that zone. Okay, that's also like I just highlighted when I take a fib from this little high to the low of the structure. That's also the 0.786. It's also the 1.618 when I do a trend-based fib extension. There's also, guess what, a daily level in that zone. So now I know, okay, I've built up confluence. There's a chance for a rejection in this zone if price gets there. And when price gets there, that's when I become interested in a trade. That's why I'm telling you guys now, I'm not interested in a trade here. The short was up here, 0.618 rejection. Okay, 1.236 fib extension. That was the short, basically underbelly resistance over there for the consolidation area. So if I'm not in that short, I'm not really interested to trade price in the middle of nowhere based on my trading strategies. But if price gets here, now I'm interested in a new short. Okay. And I will share with you where I'm interested in a long. So I am interested in a long, yeah. And I'm interested in a short, yeah. Obviously, if this area does not get respected and price just pushes out here, then we have the daily level at $66,522. I don't think there's a high probability for a move that high just as yet, but it's definitely an area that I'll pay attention to. Okay, just need to be a good boy and put in my alarm. I love when those alarms go off. When I get a notification on my phone or on my PC that says a daily level alarm went off, I get very excited. I'm like, ooh, another trade, potential trade. Okay, legends, before I continue, let me go through some comments. I can see there's a lot of comments popping in. Okay, Mr. Mark Dutch, welcome to the stream, man. Hi, Devold. So are you interested in a short from next level FIP? Yes, that's the level that I highlighted. I am more interested in the zone that I've just highlighted, but front running is a real game. And if I see a reaction at a level that's a little bit lower down, I will take an attempt. Okay, because I can be wrong and still get stopped out with profits based on the way that I've developed my trading strategy. Yeah. 300 lovely people, show your appreciation. Just tap that like button if you haven't done so already. That would be much appreciated. Tap the like button. I'm going to be here for a while. I hope you guys do enjoy the education. Okay, I'm going to do analysis and based on probabilities, what I see playing out. Okay, over maybe the rest of the week. And But what's most important is to have a plan ready, because I don't know where price is going to go next. No one knows. No one knows. And if anyone has a crystal ball, please let me know, because no one has that crystal ball. But I can identify areas that looks interesting for shorts and longs. And then when price gets there, I have my alarms. My alarms then go off and I can make a trading decision. And I love to trade from my area of interest, not to my area of interest. Because it's usually when you trade to your area of interest, okay, where you lose money. And then when price eventually comes to your area of interest, you're like, oh shit, now I have nothing left to trade with, okay, because I stuffed up trying to force trades in between. I'm sure you guys know the feeling, okay. I've been there. I've been there. Okay. Mr. Mark Riz, welcome to the live stream. Always appreciate the march here. Bitcoin. When you are hedged and asleep, how do you manage that? I'd be worried it would sweep highs and lows while he's sleeping. Yeah, but hey, Mr. Simon. Sorry, I didn't even see it was you. So there's the possibility. So for me, the simplest answer is, Simon, that I've already taken profits from both trades. So even if I get stopped out of both while I'm sleeping, I'll be stopped out with profits on both trades. The only downside is I might not be awake to take the next trade and I might miss that trade. I hope that makes sense. So I'm going to have to be patient and then wait for another level to get hit before I can take a trade. So for example, if price had to do, let me just draw it here on the exchange. If price, let's say while I'm sleeping, does this, rejects, falls down, okay, and bounces, and now I wake up, I missed the short, I missed the long, then now I have to wait. Maybe this is a 5-wave move to the upside and it corrects in a 3-wave structure. There's my opportunity. Okay, so yeah, it could stop me out of both, and then I miss the long and the short, and then I have to be patient to wait for the next trading opportunity. Maybe the D-line strategy, I don't know. Okay, maybe it builds a 3-wave structure to the upside and there's a nice little resistance, and then I can enter that short. So I'm not sure if that answered your question. Okay, it just depends on how you hedge. Because Simon, I know, and I'm sure you're not one of those people. Okay, I know that there are people that hedge like this. Okay, they do this. They do this. They target the highs. Okay, and then they do this, and they target the lows. Okay, and maybe you do that, right? And this one goes below the low. Some people will hedge like this. They don't know where price is going to go. Okay, and they enter a position over here, a long and a short. So they're hedging. The stop loss for the long is below this low. The stop loss for the short is above the high. And then what happens is price does this. Okay, stops you out of both trades. So now you have a stop loss from your short, and you have a stop loss from your long and from your short. This is the worst way you can hedge. I will never ever trade like that, ever. Because this has happened to me in the past where I don't know I don't know what's gonna happen. So let me open a schlong. Yeah, right, yeah. I don't know what's gonna happen. Okay. I'm applying my risk management, but now I'm taking a double whammy and I have 2 trades to manage, 2 trades to worry about. So that is the worst way to short, to hedge for me. Okay, if you have a hedging strategy like this and you've been successful with the strategy, great. Execute your plan, follow your plan. Great. You know, I can't trade like this. For me, this is the worst way in which you can hedge. Okay, because often what happens is price stops you out of the one, stops you out of the other one, and then it decides which direction it wants to continue. Okay, I would rather want to look for that short, and I'd rather want to look for that long. And then when I'm hedged like that, I have a short and I have a long. If price gets here to the middle, okay, I'm in profits from that trade and I'm in profits from that trade. I take some off the table. That's what I used to do, or that's what I do. And then it doesn't matter what happens. Okay, I'm making money. Simon, I'm not sure if I've answered your question. Okay, I hope I have. Can you show us the settings of small range pointer by using volume profile? Johnny, yes. You're talking about this SVP, yeah, the one that I use, the settings for this one. So if I go into the settings, you can just screen print this, okay? Screen print. Ka-ching, done, okay? Screen print. Ka-ching, done, cool, there we go. Right, those are the settings that I use. It's not the default settings. I have changed the settings. I like to see thinner bars because the thinner the bars are, the more accurate the point of controls and volume nodes are. Okay, so basically what I want to discuss now is a little bit of higher time frame analysis. You're on the 1 hour time frame, and there's a lot going on by that daily level. I don't actually need that point of control because there is a daily level there. So I don't need both levels, just to clean up the chart a little bit. Okay, but I know that there's these consolidation areas can provide resistance. Okay, there is a daily level. It's the 0.786 when I take a fib from the low to the high. There's a chance for rejection if price wants to punch up here to the upside. Okay. Right, we will look at the structure in a second, guys. I think price is still going to dance around here for a little bit, like Andy likes to say. Price is still going to dance around here for a little bit. So I just want to focus on the higher time frame quick to show you the probabilities. What are the probabilities? Up, okay, or down first? What are the probabilities? That's what I want to discuss. I can clean up the kitchen. Remember, I'm still going to be here for a while. Remember to smash up that like button. As price develops and changes, that's where I keep the community up to date. If I do enter a fresh trade, like I usually share inside of the community, I'll let the community know. If you want to be part of the community, send me the word access to my Telegram and I'll send you the instructions on how you can join. As simple as that. Okay. Because when I'm not on YouTube, I'm in the community, and if I do enter a trade and I'm not on YouTube, I let the community know. Saturday was an exception. Okay, I told the community, I'm sorry. I cannot share everything. Okay, Saturdays I usually actually don't trade, but when I saw that reaction, I was just like, looks good, let me enter. Okay, it's currently still in that long here on my Bluffin account. Right, but you can see that I've taken profits already. I'm leaving a runner. So if it wants to go up, then I have a hedge against a new short. Okay. So I suppose the biggest question on everyone's mind, or maybe just my mind, I don't know. The biggest question on my mind is this low in? And is price going to continue here to the upside and take the high at $67,000? That's what I want to try and figure out now. But before I do, let me just wrap up the comments. Okay. If you give Gerald a kiss, he will. Jeroen, welcome to the live stream, man. Do you use isolated or cross? I highly recommend, for people starting out that's still learning the ropes, that you only use isolated. Highly recommend isolated only. Okay, I do use cross because I'm a little bit more experienced and I'm managing my risk like a pro. Cross can get you wrecked if you don't know what you are doing. I always always have a stop loss in place. I will never take a trade without a stop loss. And if you are a little bit of a cowboy and you do enter trades without a stop loss, that is very dangerous because you could liquidate your entire account by using cross. So for experienced traders, cross is fine, and there are benefits to using cross. Okay. For people that are still learning and not consistently profitable as traders, I highly recommend isolated. I mostly use isolated, but on my Bluffin account, it's usually on cross. Okay. Let's go. Yep. David knows. I use PV at good luck. Naked point of controls are amazing to trade. Yeah, they are. I love them. I've had so many successful trades with naked point of controls. Thank you. Have a great weekend from Angola. Wow, all the way from Angola. S&P is going for another all-time high when market opens. That would be great. That would be great. Let's see how that plays out. Jeroen, you know, every time you post a comment, I have to read it first before I read it out loud because you're a naughty little... Okay. Anyways, do you think that point of control reacts as for now, short now? Yes, but price is not in a zone where I want to short. Like I said, okay, the short was here for me early this morning. That was the short that I highlighted inside of the community. I don't like to FOMO into a trade, okay? Unless you zoom into the smaller time frames and you say, well, okay, it's going to go down, so you want to short the retracement. So I can go into the 5 minute, 1 minute time frame now and say, well, okay, well, can I identify, okay, a shorting opportunity? And I would say, well, price is at resistance at the moment. If I go here onto the one minute time frame, can you see where price is rejecting at the moment? There, that is resistance. It's rejecting. Okay. So if I had to jump into a fresh short, this is where I would do it. You have a tiny little bit of resistance over there, and then a tiny little bit of resistance, but the most resistance is over here. So this for me is the best place to short. If I take a fib from the high to the low, 0.5 rejection, beautiful 0.5 rejection. Okay. Now this could be a 5-wave structure. Okay, there's a lot of noise on the 1 minute, and this is why I never analyze the 1 minute. But this looks like a 1, 2, 3, 4, 5-wave structure. So it could form a 3-wave corrective structure and continue. Or this is a C wave here to the upside, which has to be a 5-wave structure, and price continues to fall down. I don't know. Okay, this is why I don't like to FOMO into trades, because if I missed the short, okay, the risk to reward, I don't know if it's going to do that. Then the risk to reward doesn't make it worth it. It's a one-to-one trade for me. Then doesn't make it worth it. So if I didn't catch the short, preferably from the 0.5 SFP, then I stay out of the trade. I don't have to, remember guys, I don't have to trade every single opportunity. That is the short I wanted to take. I missed it. Now I'm just like, okay, I'll look for a next trade. I'm not particularly interested to long and short where price is at the moment. Okay. Maybe there's some scalps because there's also, okay, that's what I'm saying. There's a chance for price to move higher. It broke trend. Okay, price broke trend. And for now, it looks like a 5-wave move up. 1, 2, 3, 4, 5. It rejected at the point of control. Okay, it could go back up. Try again. There's some nice volume in the 3rd wave. That's what I like to see. And there's decreasing volume in the 5th wave. Beautiful. It's a beautiful 5-wave structure. So when I see a 5-wave structure, there's always an increased probability for price to form a higher low and continue back up. Unless it's a C wave. Okay. And this is why I'm not particularly interested to short. The long was interesting, but I mean, that happened very quickly. Whoever caught that long, well done. Okay, that happened super quick. right? You have to be sniper. You have to have your alarms ready, and you have to, stop goes below the low. You enter, you start taking profits when price hits resistance. You leave a runner because price could do that, okay, and claim the high, or at least claim the top of the order block, the top of the range high over here. Okay, and up she goes again. Lots of noise here on the 1 minute time frame. Definitely not my favorite time frame to trade unless you have a lot of screen time. Okay, unless you have a lot of time for screen time. It's still rejecting, still below the level. This could be a 1, 2. So what I'm looking at over here is that if that high does not get claimed, guys, remember there's a lot of noise on the smaller time frames. If that high does not get claimed, this could form a 5-wave impulse to the downside. If the high gets claimed, invalid. Okay, invalid. Or yeah, it looks like it's going to get claimed. There we go. Yeah, that's why I said not interested to short this zone. Anyways, the best short for me was because now that is a beautiful trade to the downside. Position protected, profits taken. If it wants to go up and stop out the short, then it was a profitable short. Okay. But yeah, guys, I don't like to stuff around on the 1 minute time frame. It's just way too much noise on the 1 minute time frame. Okay, price is still pushing up here with decreasing volume, so there's still a chance for a lower high in the zone. We can go and identify some trading opportunities in a moment. Okay, first level here to the upside that I'm interested in, I just need to go and set an alarm. This is the first level that I'm interested in. If there's going to be some sort of front running, is this one over here, the 1.236. Shit, I just need to change this. I have some templates. Let's extend that to the right. There we go. So this, I'm going to set an alarm over here just before it hits the level, so I can pay attention. If it does get there, that's where I'm interested in the next short. If not there, 1.618 together with the daily level, I already have an alarm on the daily level, so I don't have to particularly worry about that zone. But now, if there's a chance for this structure to be complete, price needs to form a lower high. Okay? Needs to form a lower high and start gaining momentum back to the downside. The retracement trades are not always easy to take, and if they don't make sense to me, then I don't take them. It's as simple as that. Because the shorting opportunity could be golden pocket 786 in the zone. Okay, that's the shorting opportunity. If price is going to form a lower high, that's where I want to see the lower high formed. And then it can fall down again, claim the lows. I just want to see something here on CVD. Yeah. Bearish CVD building up over here. Let me refresh this to show you. Okay, there's a chance for a reversal here because there is bearish 3 confirmations between that high and where price is at the moment. There's berry CVD building up, which means that the market makers are absorbing the longs. They're absorbing the longs. Okay. And retail is trying to push price up. No major sells. If I can check where Chef Money goes. Chef Money go to sleep. Hasn't gotten any sleep yet. Your price action seems slow. Mine already claimed. Yeah, because I think there's a delay between my broadcast. Okay, there's usually like a 30-second to 1 minute delay by the time I'm saying something and by the time you receive it. Could be a little bit of a delay. I did put the live stream setting on low, but there will still be a delay. Okay. Why I can't see my question? I'm not sure what question. Nightwalker. Not sure what question. Already shorted. Already shorted. Right. Nightwalker, yes, I can't see your question. Okay. Unless you used a banned word. I'm not sure what YouTube's banned words are. Okay, if you use words like scam or swear words, or often it will delete those comments and withhold those comments. Okay, so best zone for a short, if it is going to form a lower high, point of control of this entire range, 0.618, okay, 786 maximum zone. That is where I would like to see the rejection. Okay, because this could be an A, a B, and a C here to the upside. Three-wave structure. Yeah, guys, this is 5-minute stuff, right? If price does reject in that zone, I will enter a cheeky little short. I just need to open up my other exchange here quickly. Sign in. Let me do that quickly. Let me sign into my other exchange, so I can take that short if it does reject, just for fun. Okay, just for fun. Fun little trade here on the live stream. Let's try that again. You see, price is pushing up with lower volume, so there's a chance for a rejection. Let's see. No. Let's try this. Sorry guys, I just need to do my 10-factor authentication because I need to protect my capital, so I switch on all the security methods when I open up accounts. I'm just building a puzzle here quick because you know once they give you all these little riddles that you have to. Okay, now I need to get my code. Where's the code? Hello. So I can't take another trade on Bluffin because I'm already in a long and a short. Okay. So. Okay, I'm signed in. Thank goodness. That took a while. So what I want to see here now is, it's 1 minute stuff is not my favorite time frame, but let's see. Okay, this could be 1, 2, 3, 4, 5 and an A wave B, and now it's forming a C here to the upside. So let's do a little bit of a trend fib extension. Yeah, it has not even tapped the minimum target yet. So I want to see a little bit of a push higher. That's just my preference. Now, it's now above resistance, okay? Price is now above resistance, which is now support. Let me put a little boxy in there. This is now support. So if price is going to form a lower high over here, that's the only closest resistance that I see is here by the 0.618. I'm going to close this. Close. Right. Anyways, guys, I know I'm not really feeling this trade. Okay, what I want to open up a little fun trade for the stream. The trade that I'm the most interested in is if price takes the high. Now, this is the trade that I'm interested in. I'm interested in that trade and that trade. That for me is what I want to really trade. That's where I'll go in with my proper account, proper position size. Okay, this fun trade. Okay, and then below, the most interesting long for me is here by $61,100. Because I'm already positioned in the long. Okay, so I'm now enjoying the momentum here to the upside. If it wants to push up, great, I'll make more money. Okay, but if I get stopped out of my long, the most interesting long for me is in this zone. Value area low, 0.618 when I take a fib from the low to the high. Let me do it. Just roughly, 0.618. Okay. It is very common to see deviations, and I'm very aware of a deviation. Okay, so I'm just sharing with you the areas that I am most interested in trading. The trade that I want to take here is a little scalp trade, fun trade for the live stream. Okay, the areas of interest for me is short, okay, and long. Now that for me is my high probability trades that I'm waiting for. Just waiting for that. Okay, that thing stopped now. Okay. It is. So as a trader, I do not have to trade every single opportunity. The best short was that level from this morning, and now price is pushing up. If you didn't manage your trade, you didn't take profits, well, there's a high chance you could get stopped out with nothing. Okay. So deviations, okay? When you have a range, deviations are very common. Deviation, deviation, deviation. So if price does a deviation, I think there's a higher probability for price to form a higher low and not take this low just as yet. This is for me a very interesting longing zone. You also have that high volume node right over there. Okay, 0.786, golden pocket 0.618, value area low. This zone, I know it's a big zone, but I will keep the community up to date when I'm looking for a trade in that zone. But I'm going to be very interested in longs in this zone. Very interested. Just like I was interested in longs here at the bottom. When price pushes up, I'm interested in shorts. Okay, because I like to short the tops and I like to long the bottoms, not the other way around. Okay, and remember, I will keep the community up to date. If you want to be part of the community, send me the word access to my Telegram, and I'll send you the instructions on how you can join. Just the word access, okay, nothing else, right? Just the word access. And if you want to have CVD, the tool that I'm using here, now there's bullish CVD. That's the Coinbase. I'm not a big fan of Coinbase. I can actually switch that one off. I'm going to show you guys my favorite lines that I usually use. Those are my favorite lines. That's just to keep it simple. These are the lines, 3 lines that I like to use. These are the 3 lines that I mostly use. I switch the other ones off. But also if you want access to this tool, it's here under free tools. If you want to unlock all the features, okay, you need to sign up with one of my exchange partners, make a minimum deposit. The instructions are inside when you want to unlock all the features. Okay, it's CVD. footprint chart, fear and greed, economic calendar. It's got the heat map. It's got bubbles. It has terminal price drawdown from all-time high, historical risk levels, liquidation maps, liquidation heat maps. There's a lot of things going on here, and we are continuously improving and adding more things to this tool. Okay, this is everything that I use under one roof, because usually I have to go to different websites to look at different things, and now I just have one website that has everything that I need. Thank goodness. Okay. CVD is a separate indicator that I use that's not available on TradingView. TradingView does have CVD indicators, but I don't like them because they are not accurate according to what I've backtested. So, from a simplicity perspective, okay, let's keep things very simple over here. And this is what I shared this morning in the community as well. Without knowing what Elliott wave scenario is going to play out over here, I am interested in longs, and I'm interested in a short a little bit higher up. And this short can even claim the high, and I will share that trade in a moment. I would actually prefer for price to push up a little bit higher, okay, because of this structure. And I know I've briefly touched on why the structure is so important. And I also, inside of the community, asked people to try and count this structure as a 5-wave structure to the downside, because it's very important. It's very important that that structure, okay, is either a 3-wave structure or it's a 5-wave structure. And if it is a 5-wave structure, can you count this structure here to the downside as a high, clean, high probability, clean 5-wave impulse to the downside? Okay, and that's got to do with the Elliott wave scenarios that I'm about to share. Right. Is price rejecting? Not yet. I want to take that scalpy scalp, like I said, guys. Let's see what's cooking over here. Bearish CVD. So I think for a little bit of a B, running flat in a C, 1, 2, 3, 4, 5. Oh, lots of noise here on the smaller time frames. Okay, so the fun trade that I'm going to take, guys, is I'm literally going to do this. Okay, it's a fun trade. High chance to get stopped out, but this is the trade that I basically want to take now. Okay, stop goes above the high. I'm targeting next area of resistance, which is basically this little consolidation area over here. Okay, yes, depending on how you manage your trade, but I want at least a 2 risk to reward. Okay, that's my minimum criteria for taking the trade. So I basically want price to take the lows again. Okay, but I know it can bounce there at that resistance area over there, which is also that high. Okay, I'm just looking at this. Okay. So what I'm going to do for a little fun trade, high chance to get stopped out, is I'm going to enter a short stop above the high, and I'm targeting the lows of the structure for a profit-taking area. And then we'll see in a couple of hours, minutes, depending on how quickly price plays out, whether I'm going to get stopped out or make a little bit of cash. Okay, so I'm trading this the lazy way, I suppose. Isolated, yes, I'm going to leave it at isolated. Stop above the high, GP area the lows. Okay, I'm in. Now I can talk. Okay, now I don't have to stare at the chart and wait for the rejection. I can just, okay, this is basically now the trade, guys. Okay, let us just keep it real. So I need a 2 risk to reward trade at least. So that profit taking area needs to get hit for me to make the trade worth it. Okay, because for every $100 that I risk, I want to make at least 200. And if it's anything less than that, it's not worth it for me to take the trade. So that's basically what I'm looking for. Remember, it can flip this support into resistance into support that is broken out from now at the moment. Just a fun little trade, because I know that there's still a chance for price to fall down. And it's also based on the scenarios that I'm going to share now. I'm sharing with you how I approach the markets, how I trade the markets. Disclaimer, this is a fun trade. It's not a high probability trade. Just want to put it out there. This is not a high probability trade. Okay, I'm just opening up a little trade here and we can see whether it plays out or not, just for fun. Okay, it's not a big trade at all. I've opened it here on my 2-bit account, which I can show you if you want to. Right, that is the trade that I've opened. Stop above the high, I've entered over here, and my TP is set, where I basically highlighted here on TradingView. Okay, so just put this back. And as this live stream progresses, then we can say, okay, well, stopped out. Oh, hey, we made some nice cash. Okay, right. Now I can get on with the scenarios that I wanted to share on the higher time frame. I feel like I've been saying that forever and I'm not getting to it. So let's get to it. Okay, I'm going to discuss one scenario and then I'm going to take a 5-minute break because I'm going to be here for a while. Okay, so let's discuss, for me, the lowest probability scenario, which is the most bearish. Okay, it's this one. This is a scenario that I discussed in my video update last night as well. For those of you that did watch my video update, the most bearish case scenario is that price has formed a 3-wave structure to the, where's my pen? A 3-wave structure to the upside. That is the high, and price is going to claim $57,000 again. And this is the scenario that could get price there. Okay, in this scenario, price is building, but is basically building up nested 1-2s. 1 2 1 2 1 2. Its invalidation is, I need to move the invalidation, is this high. Okay, let me use a magnet to make sure that it's exactly where it needs to be. There we go. Invalidation is $65,391 for price to absolutely collapse to the downside. And remember, it can get aggressive. I've tried to mimic this structure basically over here, okay? But what could happen, and what I have seen happen many times, is, okay, I'm just trying to show you what the structure looks like, but it can literally do this. It falls and it does that. It does that aggressively to the downside. Okay. $52,000, $50,000, that level that everyone's been talking about, definitely a possibility with this scenario. Okay. Now, based on probabilities, this scenario doesn't carry the highest probability, and it's actually my least favorite scenario. So the reason I'm also now entering this fun little short is because I know the scenario can play out. So based on the scenario, okay, as long as the invalidation is not claimed, price can fall here to the downside. But I need to discuss the other scenarios with you as well. But the reason why this scenario for me doesn't carry the highest probability is because this wave 1 is an expanding structure, which is rare, never preferred unless all other scenarios fail, and there's other scenarios and they haven't failed yet. Okay, can it be a wave 1? Yes. Does it have a high probability of being a wave 1? Not really, especially when it's forming nested 1-2s. Okay, the other problem with the scenario is that I am struggling to count a clean 5-wave impulse in that structure, which I'll show you in a moment how that ties into the other Elliott wave scenarios as well. Okay, the corrective structures looks great. 3-wave up, 3-wave up, that looks fantastic. 3-wave up or 3-wave up. So far the corrective structures to the upside looks beautiful. That impulse is questionable. That one is expanding. And this retracement went very deep to the 0.886, which is a very rare second wave target. So you can see there's some issues. but I need to be aware of it from a technical perspective, because I know that if price does collapse to the downside, I want to be prepared, knowing what I need to look for. Obviously, I'm going to benefit from that short that I'm in on my Bluffin account, and then I'm going to wait for the 4/5s. And I want to see that move with a lot of selling pressure, a lot of volume needs to kick in there. And then the lows should be made on lower volume. And then that's where I become interested in longs. Okay, so I need the structure to play out so that I know when to long and when to where's the high probability for a long. Okay, and then this move down here needs to smash through support like a hot knife through butter. It just needs to drop. And that's why I'm saying I need to see high volume, because it's only high volume that's going to smash the support to the downside. So based on all the scenarios that I have, this scenario carries the lowest probability. Can it happen? Yes. If it does happen, I know what to look for and I know how to trade it. I'm already in the short from higher up. Okay, so I'm going to benefit nicely here to the downside from that short. And I have explained to you, so I like to give scenarios probabilities. Because when you have 10 scenarios and you don't have any probabilities, how do you know which scenario is more likely to play out? Okay, based on what I'm seeing here from a technical perspective, based on current price action, I cannot give the scenario the highest probability. From all the scenarios, this scenario carries the lowest probability. Okay, it was the same with this move here to the upside. Do you guys remember when we spoke about the most bullish case scenario? 1, 2, 1, 2, 1, 2, and it flies to the upside, and it does 4, 5, 4, exactly the same, but to the upside because of the nested 1-2s over here. And when I started giving the scenario lower probabilities was because of that structure. That's why I like to look at the structures that is forming, and based on that structure, I started giving the scenario lower probability. And that's why that short was so interesting based on that structure. And this is why longs in this zone look so interesting based on that structure. Okay. This little structure that is formed here to the upside, just as a little bit of a recap, I really struggled to count this structure as a 5-wave impulse. And if this is a 1 and this is a 2, that has to be a 5-wave impulsive structure. Look at this beautiful one. That's a stunning 5-wave impulse. 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. Makes the 4/5s, starts with the 1-2s, high volume in the middle. As the 4/5s chops, volume decreases, looking for a short. Beautiful structure, stunning. 5-wave impulse, 3-wave corrective structure. But now this one was an absolute mess. I'm not going to go through all the details, but it was very difficult to count a 1, 2. Now, where is 3? Okay, highest amount of volume was in this move. Okay, so 3, but now you have 1, 2, 3, 4, 5. Okay, 3, 4, 5. I think there was a couple of issues. Overlap. There was overlap inside of this structure as well. It wasn't a clean 5-wave structure. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Very short third wave, and then you have 1, 2, 3, 4, 5. So you can force a 5-wave impulse in here. Somehow you can force, but I like to say, when you have to force a count, it's most likely not the count. It's not as clean as this one. 1, 2, 1, 2, 3, 4, 5, 4, 5. Beautiful 5-wave impulse, most amount of volume in your third wave. You chop to the upside in your 4/5s. Okay, or simplicity, 1, 2, 3, 4, 5. This was an absolute mess, and that's where I started giving the nested 1-2s lower probability because of this structure. You can force a 5-wave in there, but it's not pretty. Okay. which brings me to what I wanted to discuss over here. With this move to the downside. Okay, I'm not sure why my thing is lagging like that, but anyways, I'll try and fix that. But before I discuss that little move, let me circle it. I don't know why it's doing that. Maybe I just need to close some things over here. Guys, I'm just going to take a 5-minute break. I'll be back. I'm still going to be here for a while. I'll leave you with some music. Put a little text over here, and I'll be back in 5 minutes. Back in 5 minutes. And right, let's see how this plays out. Okay. Remember to smash up that like button. Please continue having a chat with yourselves in the comments section. I will be back in 5 minutes, and then I'll continue the technical analysis regarding this structure that I've just explained on that structure to the upside, and why the probabilities based on this structure is still high to take the lows. Okay, but not so high for that nested 1-2s to the downside.
There's something moving underneath the silence. You can't stop it, you can't see it.
There's a spark you can't control. No face, no throne, no single soul. No crown, no king, no guarded gate. Just coded rhythm, rewriting fate. They don't trust what they can't hold. They fear what they can't control. But every system once began as something small no one would stand. They laughed at fire when it was stone. Now whole cities glow from what was thrown. Every empire starts unseen. Every future starts a dream.
It's rising, it's breathing through the cracks in the ceiling.
You can doubt it, you can fight it,
but you won't stop the feeling. There's an invisible fire burning under the ground. You can't cage the wire, you can't shut it down. We are rising higher, no walls around. What you can't see now will shake this town. It's burning brighter. No turning back now.
yeah. It don't knock, it flows through cracks. Built by hands that turn their backs. No permission, no applause. No signature from broken laws. They building towers made of glass. I'm building shadows built to last. They measure worth in what they see. I measure mine in legacy. Call it risky, call it strange. Every revolution looks that way. What they mock today is small. Tomorrow stands 10 stories tall.
It's growing, it's glowing, even when you don't know it.
It's silent,
But violent, and nothing can control it. There's an invisible fire running through the sound. You can doubt desire, but you can't drown the ground. We are climbing higher, feet off the ground. What you can't see now will turn this world around.
I've been doubted, I've been tested. Watch belief get dissected. Watch fear spread contagious fast. But truth don't break it out last. When pressure don't erase the flame, it only teaches it to aim. And when the dark feels permanent,
That's when the spark turns permanent. There's an invisible fire burning in us now. You can pull the wire, you can't shut it down. We are rising higher, we won't bow. What you can't see now will own this ground. It's burning brighter. We're walking through the fire. No walls can hold us now.
Right, let's get on with the technical analysis. For those of you that are still here, well done, right? It looks like that short so far is playing out. So far. We'll see after the live stream if we're going to make some ching here to the downside. Currently $63 profit. $63 profit. Hey. Let's see. Okay, back in 5. Can switch this off. Put the music a little bit softer so that it's not distracting, because I know there's some people that watch the live stream on 2x speed that don't have the time to watch it right now. I want to discuss this little structure, and this is also the question that I asked in the community. Can you count this structure as a high probability 5-wave impulse to the downside? Even this one, even that one, if you ignore that structure. Okay, remember guys, the reason I'm so focused on 5-wave structures is because they determine the direction. Okay, when you have 5 waves to the upside, 1, 2, 3, 4, 5, usually it's a 3-wave correction and continuation in that direction. When you have 5 waves, I don't know why my pen is lagging. Guys, I might have to just make sure that I've got things closed here that must be closed. Okay, let me just do this. Just closing some things here in the background. Because I might be running out of RAM. That could be an issue. Okay, so I've closed a couple of things. Can close that. Right. Get back here onto the live stream. There we go. Okay, maybe it will work better now. Okay, and then when you have 5 waves to the downside, usually it's a 3-wave corrective structure and continuation in that direction. That is why I'm always looking for 5-wave structures in a specific direction. Okay, a 5-wave structure can also be the end of something and the beginning of something new, depending on what forms over there. So based on what I've just shown you, okay, in that nested 1-2s, let's first discuss the nested 1-2s, okay, 1 2 1 2 1 2 3 4 5 4 5 to the downside, okay. All structures has to be 5-wave structures to the downside to give the downwards momentum higher probability to take the $57,000 low. Okay. Firstly, that structure is expanding like I've explained. Now it's this one over here. So if I go to the 15-minute time frame, which is my preferred time frame, I don't like to go higher than that. And I look at this structure. Let me zoom in so we can look at it together. Okay. Some people I saw did this. 1, 2, 3, 4, 5. There's a problem. Okay, wave 3 is not allowed to be the shortest. So if I take my measuring tool and I measure wave 1, I can see that wave 3 is shorter than 1 and wave 5 is longer. So it's the shortest wave in this structure, and this structure is longer than that structure, and for the wave 3 it's not allowed. So I can't count this as a 5-wave structure. Then some people are saying, okay, well, what if I move 5 over there, I move 3 over here, and this is a long 4th wave in a triangle? Great. Okay, let's consider it. Okay, so you basically, over the weekend, Saturday, boring price action, price formed a little bit of a triangle, and it broke to the downside in a wave 4, which is allowed. Wave 4 is allowed to be a triangle. Wave 2 is not allowed to be a triangle, by the way. Okay. Now I have to consider this, okay? So now I'm like, okay, 1, 2, great, okay? If I zoom into the smaller time frames, I can see a 5-wave structure there. I can see a 5-wave structure. I have to force it, but I can see a 5-wave structure. But then there's a 1, 2, 3. Where's 4? Where's 5? Because the third wave has to also have 5 waves inside of it. Okay, then I can be creative and say, well, maybe this is a 1, this is a 2, and this is a 1, 2, 3. Where's 4 and where's 5? Can you see there's an issue? I only see one move here to the downside. 1, 2, 3. Where's 4 and 5? 1, 2, 3. Too short. So I have an issue counting this structure in specifically the third wave as a high probability 5-wave structure. Then I know some eliticians are going to tell me, Dale, you need to go into the 1-minute time frame. Hell, you need to go into the 15-second time frame. Okay, let's get creative. Let's go to the 30-second time frame. Holy crap. I mean, this is insane. Okay. Oh, now I lost my space. Here we go. Because what I'm trying to figure out, maybe there's a 4th wave that I just can't see. It's the tiniest 4th wave that I have seen, okay? Maybe, okay, it is a 1, 2, 3, 4, 5. But can you now see how I have to force this count? Okay, so if I go back to the 1-minute time frame, let me show you. And remember, guys, it's just a game of probabilities at the end of the day. Okay, now I can say, okay, let me just make this one the primary scenario so it stands out a little bit more. So on the 30-second time frame, I can squeeze a wave 4 over here, and I can say, okay, well, maybe this is a 1, 2, 3, 4, 5. Okay, I can even move 2 there and say, well, this is a 1, 2, 3, 4, 5. But it feels like I'm forcing the count, okay, because there's a little bit of an issue. If I take, just delete the scribble over here, if I measure, okay, from a measuring perspective, how long is this wave 2 if this is the wave 2, and I overlay it over here, it didn't even cross the minimum requirement from a timing perspective. If that is your wave 2, same thing. didn't cross the minimum requirement. So you can see I'm forcing a 5-wave impulse to the downside. Can you count a 5-wave structure? Yes, but you're forcing the count. That's a very, very small 4th wave over there. It literally is like 3 candles on the 1 minute time frame. Okay, and the reason I'm harping on this structure, if I go back here on the 15-minute time frame, so I cannot with high probability count this structure as a 5-wave structure because of that. There's an issue there. There's the issue. Okay. Can you count a 5-wave structure? Yes, you have to force the structure. You have to almost like you're forcing the count in there. Okay. And the reason I'm highlighting this is because of, if I go back here onto the 30-minute time frame, okay, if something, because there's some people, and this is now the reason, can this be the low? The only way in which I can count this to be the low is that has to be a 5-wave structure. Because then I can get creative and say, okay, let me just make this a little bit smaller. Grab my WXY. Okay. A, B, C, W. Okay, maybe that, okay, wait. Let's redo this. Okay, A, B, C, W. Corrective structure in a X, and then a A, B, C in a Y. But now can you see, here's your problem. Well, a little bit of a problem, okay, because your Y wave has to have an A, B, C inside of it. A, B, C. And that little C wave, okay, this little C wave has to be a 5-wave structure. But you can see I'm forcing that to be a 5-wave structure. So I'm saying that, well, if this is the low, this C wave is not sexy for this WXY to be complete. ABC in a Y. Done. Not a pretty structure. Okay. But then also in the nested 1-2s, 1, 2, 3, 4, 5, 4, 5. It's not a pretty structure. And that's why I'm saying, guys, the structure that actually makes more sense for me, if this is not a C wave, because I struggle to count it as a 5-wave, what else can it be that makes more sense? That is now the question. So if I take this out the way and bring up scenario number 1, is maybe it's forming an ending diagonal in a C wave, which means that has to be a 3-wave structure, which makes more sense. Which means that this could be an A, a B, and an ending diagonal in a C wave. 3 waves down, 3 waves up, 3 waves down, 3 waves up, 3 waves down. I'm looking for a long in this zone. So a structure that now starts to make more sense tells me that the low can be claimed again. And this is why lower for longs for me makes more sense. Okay. This scenario for me is like the second lowest probability. That nested 1-2's lowest probability. I would give this one the second lowest probability, because I don't like ending diagonals and they never carry the highest probability. But I need to consider it, and definitely I will consider SFPs from these lines. Okay, oops. Right. 0.618 minimum requirement for this 5th wave is to take the low of 3. Best target is the 0.786, $61,000, 769. The beauty about this scenario is that it has a clear invalidation. That's the beauty about this scenario. Okay. In this scenario, if price falls down in a 3-wave structure in a A, B, C, you expect price to go up and claim the high. Okay. There's another count that I know Joan inside of our community also shared. okay, because we have some experienced analysts inside of our community besides myself and Andy. Okay, and remember, if you want to be part of the community, you can send me the word access to my Telegram, and I'll send you the instructions on how you can be part of the community. Very easy to join. There's a couple of ways in which you can get in. You can also move C over there. Just want to share ABC. Okay. No, I'm not going to confuse everyone. Let's just leave it like the way it was. Okay. Let's focus on the ending diagonal because the directional bias for me is the same. You're looking for up. Okay, but basically what I wanted to discuss is if this is an ABC, it could form a 1, 2, 3, 4, 5 correction, continuation to the downside, but the directional bias is up. Never guaranteed to take the high. Never guaranteed to take the high, but it's a beautiful trade to the upside. Okay. The scenarios that I prefer, that for me carry slightly higher probability is... Okay, let's discuss this one. If you don't understand Elliott wave theory, you will very quickly see that the areas where I'm looking for the longs and the shorts can be determined without Elliott wave theory. Elliott wave theory gives me another layer of confluence that price can bounce in the zones where I am looking for the shorts and the longs. That's the beauty about Elliott wave theory. Okay, is that if I have resistance in this zone, I know that there's an Elliott wave scenario that supports a rejection inside of this zone. If price falls to the downside, I know that there's an Elliott wave scenario that supports a bounce at the 0.618 value area low, basically that $61,000 zone. Okay, so I just use it as another layer of confluence, and it gives me levels that I can use from an SFP perspective. Okay, and that's how I got into many of my trades that I've shared inside of the community, is using trend-based fib extensions. In this scenario, price has formed a three-wave. Okay, it's still doing this stupid thing. Guys, what I'm going to do is let me restart my trading view. I think maybe that's going to be the best option. Let me close this and restart it. Okay, let's try this again. Right, because I know we have people in our community that loves Elliott waves. They want to see all the scenarios. And then we have people in our community that don't understand Elliott waves, and they don't even care about Elliott waves. They trade using different trading strategies. So I try and cater for everyone, and this is why I always go through support, resistance, Fibonacci retracements, fib extensions. Okay, I try and cover as much as I possibly can so that everyone gets a little bit of what they need, I suppose, from an analysis perspective. Okay, in this scenario, I know it looks a little bit confusing, but let me explain it. Okay, three-wave structure. Okay, it works now in a W. Three-wave structure in a X. Beautiful. So far, so good. Okay, and then an A to the downside. Price is forming a B to the upside, which is either done, and that is why that short was so interesting, because this three-wave structure can be a B wave, and now price falls down in a C wave where I'm looking for that long, and then it completes a WXY. Three-wave structure down, there's a chance to claim that high. Okay. Now you'll see this little dotted line that I have here. Okay, this can be an A. But if I count this A, like I've highlighted many times, as a three-wave structure, which makes more sense. Okay, if you count the A as a three-wave structure, that makes more sense. It means that B has to go up, because B has to tap at least the 0.9. 0.9 is the minimum target for a B flat, because A is a three-wave structure. If A is a five-wave structure, B can reject where it is right now. And this is why I'm saying I actually prefer a little bit higher, because this structure looks like a 3-wave structure, which means that B has to tap a 0.9. So I'm still interested in shorts, even if price takes the high over here. Oh, I was in profits. It looks like I'm going to get stopped out. Let's see how this plays out. Anyways, this is a fun little trade. Okay, so the next zone where I'm interested in longs, this is why I put the arrow here, guys, is because this can be B, or B moves up in a 5-wave structure, and this move up can be counted as a 1, 2, 3, 4, 5-wave structure to the upside, or an ending diagonal. 1, 2, 3, 4, 5, boom, it falls to the downside. Okay. Where's that scenario now? I need it. There we go. So what could also happen here is, let me just wrap up that other scenario. Not the nested 1-2s. Did I delete it? Guys, let me just undo here. I think I deleted it. There we go. Yes, I deleted it by mistake. Okay. Let me take the scribble out. Ka-ching, ka-ching, ka-ching. Put that to the top. Right, so this is definitely something that can happen as well. But now this structure needs to be counted as a 5-wave structure. Okay, so since A over here, I want to see a 1, which can be a leading diagonal. Basically a 1, a 2, a 3, a 4, and a 5. And it has to reject inside of the red zone. Invalidation for the scenario is $67,326. So even if price takes these highs, I will be interested in a short, because price could form an A, B, C flat structure. It loves to wipe out liquidity on both ends. It takes all the shorts, it takes all the longs, okay, because there's liquidity here, and it resets the markets. Flat structures are actually very common inside of Bitcoin and most commodities and assets. You get a lot of flat structures, and they are designed to reset the market. Okay, so if price does push a little bit higher, I will pay attention to these areas for potential short. If I do, okay, there's a chance that this short will hold that I have over here. If it doesn't, then I get stopped out. Maybe it stops me out of that short. Okay, I will pay attention to the 1.382 and I will re-enter that short over there. I know exactly where the invalidation is for this scenario, aka stop loss. I hope I've now explained it in a way that makes sense. Okay, so I tried to demonstrate it with this little arrow over here, just to say that, well, that this B wave is the most important. It can be in, price falls down in a C, or it goes up a little bit higher. Okay, and this is why this short last night was so interesting, because I know that this can be done. And now price just falls down here in a C wave. Okay, but it all points to the same direction. If I go back here onto the 1 hour time frame, let me show you, okay, and I do that whole shenanigans again, where I take the range, the Fibonacci from the low to the high. Okay, it all points to the zone where I'm looking for the long. It's either here or it's going to be down here, where you get the deviation below, price gets acceptance back inside of the range. Okay, and then price has formed a W, X, Y, or a W, X, Y. If short, long. I will keep the community up to date as new price action develops. The beauty about new price action, okay, is that it will give certain scenarios higher probability and other scenarios lower probability based on how new price action develops, which will change my trading plan. Okay, And that is why it is so nice to be inside of the community, because you get those updates from myself and Andy and the coaches. Okay. And if you want to be part of the community, you can send me the word access. There's my Telegram, and I'll send you the instructions on how you can join. Because I know people don't want to miss out, okay? Because I can't always be on YouTube. When I'm not on YouTube and I do enter a fresh trade, I let the community know. Saturday was an exception, but there was another opportunity to get in on Monday, which I shared. So if you missed the Saturday trade, you would have taken the same trade on Monday. Okay, and I've gone through that in detail, that amazing trade that we took together yesterday. It's basically yesterday. Right. But now you can see there's a scenario, okay, WXY. That's why that long is so interesting, because this could be a big move back to the upside from a risk to reward perspective. Okay, this short is very interesting because it grabs all the liquidity above the highs. And like I always preach, guys, I am very interested in shorts at the highs of the structure, and I'm very interested in longs at the low of the structure. Longs, longing zone, longing zone, longing zone, longing zones, shorts, shorts, shorts. I like to short the tops and I like to long the bottoms. That's how I make money. Okay, but this long could be an interesting swing long that could stay open for a week or two or three. Okay, that could be a nice little swing trade. And I know that this is the trade that Andy is waiting for as well. Okay, and if price pushes up, that's most probably the short that Andy is also waiting for, including myself, because I know that this can be a nice trade to the downside. I'm looking for bigger moves, but you have to be patient for these bigger moves. Okay, if you want to trade every single day and you want to take 2 or 3 trades every single day, this style of trading is not for you. Because swing trading takes patience. You have to wait, and you have to preserve your capital and price until price gets there. And that is actually how a lot of new traders get wrecked, because they're trading everything in between. And by the time price gets to an area of interest, they have no money left to trade, because they stuffed around in the middle where they had no business trading. You can stuff around in the middle, okay, if you know what you're doing with good risk management. And those are the trades that I share inside of the community as well. Okay, guys, it's not my style to only tell the community I'm looking for a long there and I'm looking for a short there. And then I just go silent for days and weeks. And price is just here in the middle doing nothing. And then for weeks I don't say anything. And then when price gets there, then I'm like, okay, guys, now I'm in. No. Okay. I do try and cater for most people as well, because they are scalps to take in between that can turn into a swing trade or a day trade even. Okay. Well, a day trade that can turn into a swing trade. So I do try and my best to provide some longing like we did yesterday and shorting opportunities. Okay, but you can still see that I'm looking for longs at the bottom and I'm looking for shorts higher up. Okay, I'm following the same principles. I have no business here in the middle. There's nothing for me to do in the middle of a structure. Okay, so basically this B wave, whoops, not that one, this B wave, this is basically what I'm getting to is can still extend. If by, guys, remember this structure that I've counted here to the downside, although I can't count with high confidence a 5-wave move here to the downside, sometimes it is what it is. It's a 5-wave structure and you have to force the count. Okay. Price can reject there. Price could literally sweep the highs, fall down, because there's another scenario that I highlighted to say that, well, maybe it's forming this one. I just want to take this one out the way. Okay. This is another scenario, but now this is me saying that this move to the downside, okay. Oh, it actually looks better. Sorry, this one actually looks better. I stand to be corrected. 3-wave structure and a W, 3-wave structure and an A to the upside, A B to the downside, which makes sense, more sense to me because it looks better as a three-wave structure. B flat, basically it grabs the liquidity below the low. And now prices form an ending diagonal in the wave X. So you basically have an A, B, C to complete the X wave. And then it falls down in an ABC, still looking for the long in the same zone. Can you guys see? Many different counts still looking for the short in the long and the shorts in the same zone. Okay. What makes this scenario interesting is that this ending diagonal has an invalidation. Okay, maybe the fourth wave is in. So based on current price action, if the fourth wave if price falls here to the downside, I will just drag this line unless it must just not form a parallel channel. Then it's invalidated. But as long as this is contracting, it goes towards each other, it's valid. As soon as the lines are parallel or they are expanding, I don't consider the scenario anymore. Okay, so based on current price action, drag this up. There we go. One could argue that 4 is in. Done. 4 is in. Let me take this out the way. It grabs the high again in a fifth wave. And it's done. Okay. And price has basically formed a 3-wave in 1, a 3-wave in 2, a 3-wave in 3, a 3-wave in 4, and it forms a 3-wave in 5. It rejects and it falls to the downside where I'm looking for that amazing long, the swing long that I'm looking for. Okay, I really don't mind if I miss this short because I'm already in a short on my Bluffin account. Okay, I don't mind if I miss that short, but I will try and catch it on a different account. And if I'm in front of my PC and I'm awake, because some trades have played out while I was sleeping and I couldn't take them. So if I'm in front of my PC and I'm awake, I will update the community whether I'm entering a new fresh short or not. Okay, if you want to be part of the community, send me the word access and I'll send you the instructions on how you can join. Local berry CVD is starting to form now. Okay, there's a chance for a little bit of a rejection. Yeah, local berry CVD, also higher time frame berry CVD forming over here. I'm sure if I switch on all the lines, how many 3 out of 5 confirmations. Okay, what this basically means for those of you that don't know CVD, it's the only indicator that I use, but in real time, it shows me what market makers and retail is doing. Okay. Since you are on the live stream, let me give away a little bit of secret sauce. Okay. When I see bearish CVD or bullish, but let's use this example. When I see bearish CVD forming between 2 pivots, 3 out of 5 confirmation. Okay. Number 1 is that price makes a lower high and it falls down. That's option number is always the highest option. Price forms a lower high, does not claim the high, bearish CVD, which means market makers are absorbing the shorts. Market makers wants to push the price down. It's retail that's trying to long here to the upside. That's what it's showing me. Okay. Price number 1 is that price forms a lower high without taking out this high and it claims the low of the structure. That's basically how CVD works. Lower high, higher high on CVD, higher high on CVD, lower high on price action. Target is the low of this structure, of this entire structure. That bearish CVD, the target is the low. I know some successful traders that only trade CVD. Okay, you can develop a trading strategy around just CVD, by the way. The secret sauce that I want to give away today for those of you that are watching the live stream, okay, because there's not so many people here, so I feel I can give a little bit of secret sauce away over here, is that during my backtesting of CVD, if price does not form a lower high and it moves up and it takes the high. But CVD is still bearish. CVD is just going up and up and up. The probabilities of price swinging the high, basically grabbing the liquidity and rejecting again, is extremely high. So what I like to use CVD as, okay, is that if bearish CVD is forming like it is at the moment and price takes the high, I'm very interested in a trade. So I want to see that. Most people that understand CVD will say that it's invalidated. During my backtesting, I have found that if there's bearish CVD forming before price takes the high, and it takes the high, it increases the probabilities for a rejection. So I can use it as a swing failure from this high. Based on bearish CVD, increased probabilities that it's going to reject. So it claims the high, it invalidates the bearish CVD, but it rejects and it falls to the downside. So that's the secret sauce. That's what I found in my back testing. Whenever I saw bullish or bearish CVD in a structure and price does take the low or the high, it swings that high or that low with a higher probability. So it becomes an interesting short, which makes this scenario very interesting. Okay, based on bearish CVD, if price does not fall down from here, maybe 4 moves over there, okay, forms a 3-wave structure. So that's 3-wave structure in 4, and then it goes and takes the high. But if it goes up and it takes the high immediately, there's a high chance for price to grab the liquidity and reject. And then it's a 1, 2, 3, 4, 5, done, and it falls to the downside to complete the Y wave. And that's why I said, guys, the only short for me that looks the most interesting is above. Okay, that's where I'm interested in the short. It's either going to be an ending diagonal in a C wave, or it's going to be that A, B, C to the downside, where I'll be interested in a short at higher levels. If I don't see the rejection here, not interested in the trade. This scenario does have a clear invalidation if the 4th wave is finished. Ooh, let me just take all the scribble out the way. Okay, now, I now have to speculate a little bit over here. If new price action develops, then I'll keep the community up to date with the new invalidation. I can only calculate the invalidation for this 5th wave based on current price action. So if 4 is going to fall a little bit further, the invalidation will change. Okay. So how you calculate the invalidation for your 5th wave is you measure the length of your 3rd wave. So I take my trend-based fib from the bottom of 2 to the top of 3. Okay. I move it to the bottom of 4. Now you see if 4 is still going to fall down, I need to drag this down. But this is now what I have right now. So the invalidation for this scenario is the 1-to-1 extension. Most common target for the 5th wave to reject is, okay, minimum requirement for the 5th wave is to take the high of 3. So it doesn't have to get there. It can take the high of 3 and reject. And this is why I will still consider this SFP over here. And then obviously those 2 lines become SFP lines for me as well. Invalidation. No more. Out the window. Then I'm going to consider the flat scenario. Okay, A, B, C. So I'll still be looking for the shorts, but I'm looking for the shorts at the high of the structure. I'm looking for the longs at the low of the structure. I hope this is sinking in, guys. You know, I feel like I'm repeating myself the whole time. I'm shorting the tops and I'm longing the bottoms. It's as simple as that. And although I say it's as simple as that, a lot of people don't do it. They look for shorts and longs everywhere. Okay, where it doesn't even make sense to look for a short, or it doesn't even make sense to look for a long. I cannot, because guys, I see this all the time. I get personal messages from people. I see it in other people's communities. Okay, that I saw people longing over there. Aggressively longing over there. Okay, I saw people shorting over there. It happens. And this is why I'm hammering on the fact I cannot look for longs at the top of a structure and I cannot look for shorts at the bottom of the structure. I'm looking for shorts and I'm looking for longs. Okay, just like that long, it was at the bottom of the structure where I was looking for the long, and this short was provided at the top of the structure. It has to be the other way around, otherwise you're going to struggle as a technical trader. Well, for me at least, that's what I've learned. Okay, and I've seen people even here, leaving comments inside of the live streams. For example, they'll say, "Hey, dear Volt, I've longed here. Please, can you help? I'm going to get liquidated. I'm almost, you guys have seen those comments from people as well. Okay, it happens. FOMO kicks in, like, oh, it's just gonna go. It's not gonna stop. That's where the emotional trading, the FOMO starts kicking in. You trading without a plan. It's just gonna continue, and it doesn't. That's where I was looking for shorts at the top of the structure. Right. Let me know if you guys do enjoy the content by smashing up that like button. How many likes do we have? We have... Does it show me? 192 likes. Guys, can we push it to at least 200? Can we push it the likes to at least 200? That would be much appreciated. 7 more likes. Okay. Oh, there we go. There we go. One more. Am I going to get a little bit more than 1? That would be great. If I can get a little bit more than 1, that would be great. 211. Thank you so much. Much appreciated. Cheers. Much appreciated. Uncle Cyril, let me put the comments back here. Say hi to everyone. See what you guys are up to. Uncle Cyril, like Bliksums, like. Love the Afrikaans humor here in South Africa. I'm double liking. The content is amazing. Alien Psyop, I'm glad you're enjoying it. I'm really glad you're enjoying it. I do sometimes feel, because I repeat so much of what I say every day, I sometimes feel like people are getting irritated or, oh God, here he goes again with that, But I also realize that repetition sinks in. When you hear something 1,000 times, sometimes you don't hear it until the penny drops. And you're like, my God, he's been saying this for so long, but I only snapped it today. It happens, guys. It happened to me as well, where I will watch, for example, Andy's live streams. Years ago, when I used to watch Andy's live streams, I'll be like, fuck, he said this most probably 1,000 times. And today, the penny actually dropped for me. I'm so glad he hammered on that point, and he still hammers on those points. Okay. So thanks for smashing up that like button. I really appreciate it. The content is amazing. Dear Walter, how do you short all-time high? How do you short all-time high? What do you mean all-time high? This all-time high? Local all-time high? Or do you mean like, did I short all-time high? Like over here? Or I'm not sure what you mean. Okay. Alex, I'm not sure what you mean. How do I short all-time high? Or do you mean, maybe just clarify in the comments, do you mean how do I short the tops and how do I long the bottoms? Because that's often the trades that I'm in, and people are amazed. Okay, guys, I've had people saying comments to say that you are in cahoots with the exchange. They put the orders in there for you because of how I catch these trades. I can't believe that I'm catching the tops and that I'm catching the bottoms when I trade. Some people can't believe it, but the community has seen me do. This trade was done live in the live stream on a Tuesday. This trade was done on a Tuesday live on YouTube. Yeah, live. It was done live. So people that don't believe me, you don't have to believe me. I don't care. As long as I'm making money, I'm happy. I don't care if people believe me. The exchanges cannot insert. Well, I haven't heard of anything like that, guys. Okay, they can't fake my trades, and anyways, people must not believe what they believe. because a lot of these trades I take live in the community or live here on YouTube, and it's done using swing failure patterns. Swing failure, interesting fact, swing failure strategies is the only strategy that allows me to catch tops and bottoms responsibly. Because you will hear many people say, don't short a rocket and don't try and long a falling knife. Smelly fingers. Those are the terms that gets thrown around. And here's devil, smelly fingers catching the bottoms successfully without blowing up my account. And that I've developed with swing failure patterns. It's the only strategy that allows you to do that responsibly. And guys, for those of you that don't know, okay, let me do this. I'm going to share it. Let me just open up my Telegram. Let me see if I can share this. I want to just do that. You will see inside of our community, okay, this is not really big, but inside of our community, we have the Bitcoin section where I post updates and my analysis in the morning. Okay, we can go through that now. But we have a knowledge vault where Andy did a tutorial on how to use the order flow. Okay, where I shared how I trade an SFP. That's the one I recorded. I extracted it from the live stream and I said, many people ask me how I trade an SFP. Well, here you go. That's how I trade an SFP. Okay. How do I place daily, weekly levels? So if you guys have any trading related questions, you can always go here to the knowledge vault and look at what I put inside of here. If you have more questions that's not covered here, let me know and we can do a vote inside of the community and you guys can say, okay, dear, well, can you show us this? And I'll make a video and I'll post it in here. That's the purpose of this knowledge vault, is so that if you have any trading related questions, hopefully the answers are in there. And if it's not, I'll make a video. Okay. But I want to see if this can play. If you're getting nervous, let me do this. I want to play you guys that video. It's only how do I trade swing failure patterns? This video is 2 minutes. It literally is 2 minutes. Let me just system audio full volume, put the music softer. Let me play this for you guys. Okay. And for those of you that were in this live stream, okay, this is basically what I've extracted from the YouTube video. I just need to, if you're getting nervous about a trade, okay, I like to listen to stuff a little bit faster, so I'll just leave that at 1x speed. Okay, there's some other educational elements in here as well that I just included, but can you guys see it's getting close to that level over here, okay, where I entered this short. It's this short. It's that short that I recorded. Okay, so let's play it. If you're getting nervous about a trade like this, I'm not saying it's always the case. If you're getting nervous about a trade like this, most often what it means is that you could be risking too much. Because if you're risking peanuts, you should not be nervous. If you risk, well, for me, if I'm risking what I'm supposed to be risking, I'm not nervous about the trade because I know I'm going to get stopped out and lose what I wanted to lose. It's not great to lose a trade. It sucks. But what really sucks is if you have a 10% hole in your account or a 20% hole in your account or no account. Okay, that sucks. I've just, guys, and I'm speaking based on my experience. Based on my experience when I used to trade years ago, when I learned how to trade, usually when I was nervous to enter a trade, I was risking too much. And when I lowered my position size, I was like, oh, it's now easier to take these trades because I know I'm risking what I'm supposed to be risking, what I feel comfortable risking. Dum-dum-dum. No trade for me as price is above my area of interest. Am I maybe missing any other levels? I think I've prepared it pretty well over here. Yeah, those are the zones. Price is pushing up. Volume is increasing for the moment, so no short for me just as yet. Yeah. Now I wait. Oh, sorry guys, I forgot to drag my exchange here to the downside in case I do want to jump into this trade. If I miss it, I miss it. If I don't see the reaction that I want, how do I lead the scribble now here from this thing? Oh, there we go. Ooh, it looks like people are entering shorts over here. It looks like people are entering shorts. I wouldn't be surprised if I see bullish CVD forming. Nope, it's still fine. It's still fine. It is still fine. Okay. I like that price is back below the level. It now just needs to stay back below the level. Guys, always high chance to get stopped out. I did enter as price got the pullback below the level, stop loss above the high, and 0.15% of my portfolio. So less than 1%. I don't have to risk much here because it's a SFP. Okay, and that is basically how I trade swing failure patterns. So I'm sure the community members has seen that many times, but I get a lot of questions, Devil, how do you catch the tops? How do you catch the bottoms? That's how I catch the tops and the bottoms. So you can see nothing's ever for certain. I was like checking CVD. I was like, okay, maybe it's bullish. I checked it and I said, okay, no, there's no bullish CVD yet. It's pulling back below the level. I enter, I put my stuff above the wick. And for those of you that were in that live stream, you saw how close price came to stopping me out. But I left my stop loss. I didn't move my stop loss. I left it. I was like, if I get stopped out, I'm looking for the next level above. There was more levels to the upside. But that's how I traded SFP. And that is how I get into these trades where I catch the tops and I catch the bottoms using swing failure patterns. This one was done with a daily level. This one was done with a 0.618 fib extension. I love to trade fib extension levels. Love it, love it, love it. Okay, Andy always talks about how much I love to trade fib extension levels because they go hand in hand with Elliott wave theory, but I traded fib extension levels before I even knew Elliott wave theory. And now that I know Elliott wave theory, I can just pull them a little bit better. Okay, because I just used to pull 100 fib levels and then I'll watch the reaction at each level. For example, when I started out with fib extension levels. But this one was basically a short from the 0.618 fib extension level. High probability, well, in hindsight, it looks amazing, right? But it was nerve-wracking to enter it. Because when I explain swing failure patterns, a lot of people, especially when they knew, they're like, yeah, it's so easy. It's so easy to trade a fib extension level. To trade an SFP from a daily or naked point of control. It's not that easy when you do it yourself. You have to do it hundreds and thousands of times, and then it becomes easier and easier and easier and easier. And that's why I always tell people, practice swing failure patterns with a little bit of money. That if you lose 10 trades in a day, it doesn't make a difference in your life. That's how little you need to trade with, but practice them. Because a lot of people struggle with swing failure patterns because they go in too heavy, and when they're wrong, they blow little holes in their account. Okay, swing failure patterns is one of those strategies that requires a lot of practice. Okay, and then inside of the community, as always, guys, I share a lot of updates every single day. By the way, for those of you that don't know, Andy's on a break. Just a quick heads up, I've come over to the UK this week for my cousin's wedding. And to also celebrate my birthday, which is on Wednesday, so I'll be a little bit more quiet, but Devil is taking care of things, and this is why I'm on YouTube, taking care of the community, and he's on a little bit of a break. He might do an update here and there. He did say he might post a video or two on YouTube. He might pop into the community. Great. If he doesn't, he deserves a break. Okay. So that was basically the short that I highlighted last night. Can you guys see that? Let me make myself a little bit smaller. Last night I went to bed. I said that is the zone where I will consider a short. Okay. Interesting zone for me to consider short. Might miss it as I'll probably be asleep. And then bang. I just asked, did anyone take the short, because I missed it. I was busy traveling. Okay, I was on a school run. I missed it. I can't enter a trade while I'm driving. It's as simple as that. Okay, and then basically all the scenarios that I'm going through here now, I've already shared early this morning inside of the community, explaining the probabilities, the zones where I'm looking for the longs. Okay, price is still holding this little support box over here. And if this short doesn't hold, then I've now explained where I'm looking for the new shorts. Okay. And then obviously now I'm live. Okay. And then after I'm live, I must probably share some more updates based on how price action is developing. So a lot going on here. We have the chat section. We have our... Yes, Mr. Joan. Yes, you guys see, beautiful conversations that we have. Joan, out of interest, because Joan is an amazing Elliott wave counter, can you count this structure as a high probability impulse to the downside that I've now spent a good amount of time trying to explain to everyone? Can you count a high probability impulsive structure to the downside? And I knew the best person to ask is Joan, because if there's a 5-wave structure, you will find it. Okay, and now he came back with a response to say, no, I can't. Only forced something like this with a long 4th wave. What did he do over here? 1, 2, 1, 2, 3, 4, 5. Truncation in the 5th wave. So you see you're forcing a count. The truncation is extremely rare. 4, 5. I also looked at this one. 1, 2, 3, 4, 5. But then there's a truncation in the 5th wave. So no high yes, you can force a 5-wave in there, but it's not a high probability count. And Joan has now just confirmed this for me as well. So yeah, as you guys can see, we also have Dylan inside of our community. I'm sharing this with people that hasn't been inside of the community, just to show you what our community looks like. It's very simple, straight to the point. And okay, Mr. Dylan over here is an altcoin trader using a very simple trading strategy. He does not look at Elliott wave theory. He does not look at Fibonacci levels. He literally just uses similar to my D-line strategy, and that's all he trades, looking at different altcoins. And Dylan has an exceptionally high win rate. Okay, over 70%, sometimes 75, sometimes 80% win rate per month. He's a consistently profitable trader. We keep record of every single trade that Dylan enters, and his win rate is above 70. So basically, if you took every single trade that Dylan is taking or sharing from an education perspective, okay, he's not sharing a signal. He's telling people, this is the trade that I am going to take, and this is why I'm taking the trade from an educational perspective. Okay, so trading can be as simple or as difficult as you want to make it. There's no Elliott wave scenarios here, guys. There's just breakout strategies. And he's very successful in his trading. Anyways, for those that do like to trade altcoins, we try and cater for everyone inside of the community. Right, that is basically the community. If you, as always, guys, if you are interested in joining the community, you can send me the word access to my Telegram, and I'll send you the instructions on how you can join. Remember, if you sign up with one of my affiliate partners, Bluffin, Tubit, Kraken, Weeks, and you make a minimum deposit of $500, it's your account, it's your money to trade with. Okay? It will give you access to the community, and it will unlock all the tools inside of the tool section that I've just explained here, CVD. Okay, that's the benefit of using one of our affiliate partners. You also get the best deals that those exchanges has to offer. Okay, Bluffin, you get 30% for new people. You get 30% discount on your trading fees for Bluffin. Okay, I do actually have, guys, I just want to share, because I have received a lot of questions from people asking me, what are the benefits from these exchanges? What are the deals from these exchanges? So I want to take 2 minutes and just go through what are the deals from these exchanges. First up is 2bit. I love 2bit. I also have spot in 2bit, by the way. You can win $8,810 in rewards. Okay, you get $30 just by registering and opening up an account. You get VIP 1 for 1 month, which means you get reduced trading fees. Then when you trade, okay, basically the more you deposit, the more money gets dropped into your account. The more you trade, the more money gets dropped into your futures account. 2bit. And the link that I have down in the description is the pro version of 2bit. It's better than the one that you're going to Google. Okay, there's a normal 2bit version and there's a pro 2bit version. I prefer the pro version. That's the one that I've tested out and that's the one that I like. So the link down in the description is the pro version. You can see it says pro there inside of the link. Okay, this is the deal from 2bit because a lot of people ask me. Bluffin is 30% fee discount, VIP 3 for 7 days. Okay, also they have the deal where the more you trade, more money gets airdropped into your account. It is one of the exchanges where I have most of my trading portfolio. I really love to trade on Bluffin because of how clean the UI is, a user interface. Okay, and then lastly, Weeks. Mr. Weeks over here, $15,000 USDT welcome bonus. Okay, bind your phone and email to get between a $10 and $100 coupon. The more you deposit, the more money gets added to your futures account that you can use towards losses or fees. The more you trade, the more money gets airdropped. So those are basically the offers from these exchanges. You only get these offers from these links. That's it. If you go and Google one of these exchanges, sorry, you're not going to get the offers. Also, when you use one of my affiliate links, you can see it has Devil there at the back, which is my affiliate links. And you make a minimum deposit of $500, you will get access to the community and you'll get access to the tool. Okay. Right. Price is struggling to get through this point of control. You can see that's an area of resistance. Okay. Price is struggling to get through there. And there is some berry CVD, which this is basically the tool that you get access to. You get, everything gets unlocked. There is a free version where you can see some of it, but not all of the features. Berry CVD, let's see how this plays out. Okay, remember to smash up that like button if you do enjoy the education. And take that box out the way. Let's continue with the technical analysis, but first let's go through some comments. There's another scenario that I'm seeing here that I have not discussed. And maybe I should discuss that scenario because it also aligns with the long that I'm looking for. It's a very simple scenario. Okay, I will get to that after I go through the comments. There we go. Yes, it was also the anchored VWAP. Cyril, you're right. Wasn't it the anchored VWAP? Where is that anchored VWAP again? Yeah, look at that. It was the anchored VWAP. It was the 0.618. I can't even remember. I need to go back to that stream and see how I analyzed the structure to get that 0.618. It was that one. Look at that. That was the confluence where I took that short. Anchored VWAP 0.618. Rejection. Entered the short. Now price is where it is at the moment. Thanks for reminding me, Uncle Cyril. Yes, it is. That was the confluence that we built up over there. Okay. Such a great short to look for shorts at the tops when everyone flips bullish, because I can remember a lot of people were bullish over here. A lot of bullishness. Most bullish case scenario being a 1 2 1 2 1 2 1 2, and it's just gonna pop to the upside. Okay, well, that was going to pop to the upside. And I was just like, based on that structure, I don't see that with a high probability, but I will be ready for it. I did highlight the scenario and I said there's a chance it could play out. Then there's no short for me. If I don't see the reaction, there's no short. Okay, but based on that structure, I also told people I'm struggling to count that as a 5-wave structure. Struggling. 1, 2, 3, 4, 5. Yeah, damn short third wave. It just, that structure didn't make sense as a 5-wave structure, which made the short more interesting. And it's the same thing with this little structure. Okay, for something to come to an end over here in a W, X, Y, that has to be a C wave. So based on how that structure ended, I think there's an increased probability to take the low again, but not to capitulate to the downside. That's basically the crux of what I was trying to highlight with that structure. So let me repeat. Based on, let me zoom in. Okay. You can count something finished over here from the top. A W, a X, and an A, B, C in a Y. But that structure has to be a 5-wave impulsive structure to the downside for it to be the end. Which Joan, that I showed you now inside of the community, just also confirmed you have to force something in there. Okay, and that's why I'm saying that I think that the structure is going to extend a little bit. So what it basically means is W in a 3-wave structure. Okay, this can either be an X and then it gets the Y to the downside, or that's your X and this is your A, B, C to the downside. But because of how this structure ended, I think there's a higher chance to claim the low again, but not capitulate. It finds a low over here. It finds its feet and it goes back up. But for this to be the low and to go claim the high, based on that structure, carries low probability. I hope I'm not creating confusion. Do you get what I'm trying to tell, to highlight the probability? I think there's a higher probability for this low to be claimed again, but for price to make a higher low and continue up. The most bearish case scenario, and it feels like history is repeating itself, okay? The most bullish case scenario was 1, 2, 1, 2, 1, 2, 1, 2, boom, to the upside. It didn't play out. Now it's doing the same thing to the downside. 1, 2, 1, 2, 1, 2, boo, and people expect capitulation to the downside. That didn't play out because of that structure. Now I'm saying there's a low probability for this to play out based on that structure. And that is why I analyze these structures internally to see, well, what are the probabilities? Can it happen? Yes. There's always a possibility for a low probability scenario to play out. And I will be ready for that scenario. But what is the likelihood of it playing out? I think if price does fall down, I think there's a higher chance for price to find its feet, not take the low, and claim the high again. Guys, I can be wrong. Okay, that's why I have my risk management in place. That is why my positions are protected. Because no one can predict the market with certainty, but at least I can give it probabilities, because when someone highlights 10 scenarios and they don't give it probabilities, you're going to be like a chameleon on a Smarty box. You're not going to know which way to go. Okay. Based on that structure, low probability for the nested 1-2s. Can it play out? Yes, it could have continued, and then I would have looked for the short over there. Now, the same thing is happening to the downside. I think there's a higher chance for price to do that. Not claim the low just as yet. After price does that, I'm going to sing a different tune. If price forms a higher low, whether that is the low, then that's a forced 5-wave structure to the downside. If that is the low, so it's either from here But then this structure doesn't look great as an impulsive structure. Anyways, there's problems. There's problems there for this to be the low. It looks better for that to be the low. But when price gets here, I'm going to sing a different tune. Then I'm going to say there's an increased probability to take the low. Because larger three-wave structure, price falls down. And I mean price can shoot up even to $74,000 easily. It can happen, okay? Let me take that anchored VWAP out the way. Right. What I will be looking for, and it's too early to tell, okay? You know me, guys. I'm simple from a trend base. I like to, when I want to measure resistance to the upside, I like to use extension levels from the low of the structure to the high of the structure. Come on, snap on. Snap on. I like to use my magnets to get it exact. Okay. Now this is the only low I have now. If price falls down, I will drag this down. Okay. So based on current price action, if that is the low, which is strange because usually when price gets acceptance back inside of the range, when price gets acceptance back inside of the range, it usually goes to the bottom, especially when it loses the point of control. Okay, so if I had to then drag this down to say that, well, maybe this is where the bounce is going to happen. These are the levels that I will be keeping an eye on. Okay, let me go to the 4-hour time frame. So one thing that I do want to highlight, and it might sound unbelievable now, okay, if price forms a higher low and it moves up, it can really rock and roll to the upside. It can go and smack the 1.618. It can go and smack the 2 extension, but it's still a three-wave structure. And as long as this structure is a three-wave structure, doesn't matter how high it goes, it can claim the low again. This was a three-wave structure. Doesn't matter how high it goes, it's still a three-wave structure. If this structure did this and went up again, 1, 2, 3, 4, 5. Now the retracement becomes interesting for a long. So the structure needs to prove itself that it wants to reverse the price of Bitcoin. For now, based on local price action, momentum is still to the downside, and this structure has not proven itself as a 5-wave structure yet, unless this happens. Unless that happens. And as long as that does not happen, this low is ready to be claimed. Doesn't matter how high it goes, because I can just imagine if price gets here to $80,000, I can just imagine, oh man, I should have bought more spot over here, or I didn't buy spot, I should have bought over here. You know, that's where the FOMO starts kicking in. People start buying on spot. It's just going up. The bull market is back. They were right. The bull market, the low is in. They were right. The low is in. And then, oh shit, what happened? What happened? Okay, that can happen. As long as it's a three-wave structure, the low is in danger. That little move over there, the 4 and the 5, can change the game. But I need the 4 and the 5 before I can switch bullish from a macro perspective. So you can see I don't have bias in any direction. I need the structure to show me that it wants to reverse. And there's nothing yet that shows me it wants to reverse. There's no 5-wave structure. Every correction has had a 3-wave structure. Impulse, 3-wave up. Impulse, 3-wave up. Impulse, 3-wave up. Impulse, the structure needs to prove itself if it wants to reverse. And as long as the structure has not proven itself, down we go. Hope that makes sense. Remember to smash up the like button if you do enjoy the education, the content. And you can even see guys, in these mini little structures, okay, you might have to go into the smaller time frames. But if you zoom into the smaller time frames, you have an impulse, three-wave structure. You have an impulse, three-wave structure. If you go and zoom into those structures, three-wave structure. The impulse, the direction is to the downside, and the movements up are always three-wave structures. And the three-wave crap to the upside needs to stop in order to reverse the price of Bitcoin back to the upside. And that's exactly what happened at the bear market lows. If I go to the daily time frame, okay, this is what needs to happen to reverse the bear market. What happened here? It created a five-wave structure to the upside. And remember, you're not late. You can see you were not late. Look at this, all to the upside. Okay, but you wait for confirmation. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. However you wanted to count it, there was a five-wave structure. Now, where's the three-wave structure? Oh my God, the retracement becomes very interesting for long. Because look at what happened next. You're not late to the party. You might miss the entire first bounce to the upside, but it gives you an opportunity to get in so that you can make more money. And even if you missed this one, it was still a 1, 2, 3, 4, 5 wave structure to the upside, highest amount of volume in the third wave. I remember analyzing the structure, and I told everyone it looks like a 5-wave structure, especially because of the correction. No 5-wave moves to the downside, and I kept on screaming, guys, I think that high is going to be claimed again based on what's happening here. So even if you missed all of this, there was still upwards momentum. So guys, and this is why people get into a panic to say that, what if this is the low? What if this is the low? Now I've missed it. No, you haven't. Not by a long shot. Because even if price does this, 1, 2, 3, 4, 5, and you miss this entire move, there's your opportunity. Because it's what comes next that is insane. Because what price could do is 1, 2, 3, 4, 5. You can still take advantage of that. So you're not missing anything by waiting for confirmation. That's it. You guys get the point that I'm trying to drill through here, right? Okay. And that's what I learned in Elliott wave theory, by the way. So you can see I'm not counting waves, I'm just looking at the momentum. Okay, momentum down, 3 waves up. Momentum up, 3 waves down. And for the moment, momentum is to the downside and there's no 5 waves to the upside. Unfortunately. Well, not confirmed at least. So I love to use this bars pattern to show everyone. Okay, this is basically, oops, not the anchored VWAP. I love to use this bars pattern. Okay, do yourself a favor, go do it on your chart. Take this bars pattern from this little structure and tell yourself you haven't missed anything. Because that is such a beautiful 1, 2, 3, which is the shorting opportunity. You can see it doesn't matter how high it goes. But when it comes down, you can see you can still make money from the short. So that it doesn't matter how high the structure goes, it's a shorting opportunity for me. Okay. But when it takes that high again, it forms a correction and it takes the high again. Now you have a 1, 2, 3, 4, 5. That is where your opportunity lies. So you might miss the initial pump, but you can get the opportunity to join the next move back to the upside. Okay. Next move back to the upside. I just like to use that one because it's such a beautiful 5-wave structure. You wait for the retracement. And I remember analyzing that corrective structure because it was the analysis inside of the corrective structure that told me that that is a great longing opportunity. That is where I bought ETH. That's where I bought Link. I bought a couple of altcoins, bought Bitcoin there when no one, and I think Mariela, I remember you being in this live stream, Crypto Big Brains. I remember some of the community members, they were in the live stream over here when I told everyone I'm buying now. there. I was buying there. I bought Bitcoin, I bought Ethereum, I bought a couple of things over there. And there was people in the live stream that told me, you are batshit crazy. It's going down. And I said, based on my analysis, that is a corrective structure. It's not an impulsive structure to the downside. You have an impulse up and you have a 3-wave down. I counted the waves, W, X, Ys. I might still have that count in my folder somewhere. But it was a higher probability corrective structure, and that is why I bought over there, and I benefited from that entire move to the upside. Where XRP and Ethereum gave me the biggest gains from an altcoin perspective. The other ones, let's not talk about it. Okay, I still have those spot bags. But Ethereum did pretty well and XRP did pretty well, and it basically covered all the losses that I had for the other altcoins, plus a little bit more profits. And I did take aggressive profits from XRP. Ethereum, I took profits, but not a lot. Okay, so because I remember, guys, when price was here, there was people crying that they didn't buy over there from a spot perspective. Price forms a 1, 2, 3, 4, 5. Wait, every structure has to correct itself. Every structure has to correct itself. That's where the opportunity lies, is in the correction. You can see it over here. Every structure corrects itself. Correction. It's in the corrections where the opportunity lies for the next move up. And this is now the way that we're playing the momentum to the downside. Okay. Momentum down, I'm looking for the short. Momentum down, I'm looking for the short. Momentum down, I'm looking for the short. I am in that short at the moment. I also did take that short. I just closed it way too early, but I made a lot of money with that short. I just closed it way too early. But I did take that short, and I'm in that short at the moment. If it wants to go higher, hopefully I'm part of that short. Because now it reminds me of when I was looking for longs and longs. Now I'm looking for shorts and looking for shorts. So people that are saying that the bull market has started and the low is in, well, there's no confirmation yet. Yes, the low can be in. The low can be in, but there's no confirmation. Unfortunately. It needs more time. It really needs more time. The structure is still very young. Right. I think I've said a lot over here. Let me go through some comments. Oil is dumping. Looks like wash. Right, markets just fine. The Fed holding their hand. There we go. All-time high S&P market. Oh, all-time high for S&P 500. Let's go check it out. S&P 500 all-time high. Let's go check it out. Wow. Okay. This does not want to load up. Oof. Beautiful. All-time high for the S&P 500. It's just not stopping. This is like a rocket on steroids here to the upside. It's absolutely unbelievable. It's just such short corrections. Okay. It's just like up, little bit down, up, little bit down. I mean, that was brutal, by the way. Yo, that was brutal. 2020. COVID, most probably COVID, up, down, but I mean, it's just up, right? So you need to, it's almost like you need to really take advantage of any dip that you get inside of the S&P 500. Okay, the parabola, the parabol curve is very strong with this one. The force is strong with this one. Yeah, all-time high claimed again. I want to see what this looks like on the log scale. I just want to go see why I have that FIP there. Yeah, I mean, guys, it doesn't matter when you bought now. It really doesn't matter when you bought. It's just been up. Okay, this was brutal. When was this? 1932. But it doesn't. I think what's interesting about these bigger assets like the S&P 500 is that it's never a bad place to buy, right? Even if you buy the all-time highs, because over the last, since 1934 over here, since 1934, even if you bought the tops, even if you bought all the tops, okay, you would have made money from a long-term investment perspective. But if you buy the tops, there you go. Maybe you buy this top, okay, it gets a pullback, but then it goes again. Because, you know, often you wait for a pullback that just never comes. Now, this is absolutely insane. I just want to see something here on the 4-hour time frame. Oh, I was analyzing the structure. I'm not sure why I was analyzing the structure, but I basically took a FIB from the low to the high, saw the bounce at the 0.618 at support, and yeah, now price is moving up here. 1, 2, 3, 4, 5. Correction, continuation. Yeah, this could still, I think this could really, this could still go, because if this is, I mean, I'm not going to go into that count right now, but I mean, this can still, even if it's a three-wave structure, I would still expect a little bit of follow through. Let's go through some comments. Remember to smash up that like button. Devold, here is a real deal 30, okay, from the community. For me, you are the #1 trader. I like your style. Do you have some courses, books? I do actually have a course. I will share the details inside of the community, and maybe I'll add a link to this YouTube description as well if you are interested in the course. Okay, it's also on our Mind Pillar website. Let me go check this out. I'm not sure if it's I think the team still needs to upload it. It's supposed to be coming soon, but I do have a course. We have a new website, so I think the team's still busy uploading it though. But it will be available. I'll let you guys know as soon as it's available. But I do have a trading course. Andy also has a trading course. His is the information is still very relevant. Okay, but his course is a little bit older. You can see he made the course when he still had more hair. Okay, a little bit younger, less wrinkles. Mine is a little bit more later. I did my course last year, and I finished it in Feb, I think, this year. But yes, I do have a course. Right. Learn. No. Let me see what CVD is doing over here. Ooh. Dumping hard at the moment. But thanks for joining the live stream, and I see you posting questions. Real deal 333. I see you posting questions all the time. I do respond to you. Maybe not always, guys. I can't respond to everyone. I'm not always in front of the chart, and sometimes there's just way too many messages. Okay, and then I rely on the community members to help each other out, because we do have experienced traders inside of our community. And if you want to, as always, guys, if you do want to be part of the community, send me the word access to my Telegram, and I'll send you the instructions on how you can join. Okay, there's no way in hell the low is in. I tend to lean towards the same side. I think that the low will be swept. I think how things can get really, really boring. Okay. Do you remember from the previous bull cycle? Let's stay here on the daily time frame. Do you remember this? It was boring. This. Okay. Aggressive momentum from the up. Okay. Down, 3-wave up, down, 3-wave up, down, 3-wave, down, and then this range. But you can see a chop for very long, okay, from June up until November. For 5 months, okay, price literally went almost sideways. And then towards the end of the structure, it made one final dip and then it moved up. So basically the same thing can happen here, where price could literally just go sideways until November, December, Jan, even next year. What price could literally do here is do that. Maybe up, maybe down, maybe up, maybe down a little bit. And then here by November, December, it does that. It just grabs, it does exactly like it did in the previous bear market. It goes sideways, and then just before the bull market starts, it makes the final dip to the downside. Something bad. I can tell you guys now, I can almost guarantee you, okay, something bad is going to happen over here. And it's going to cause that. Maybe Michael Saylor is going to sell more Bitcoin, or maybe an exchange is going to get liquidated again, like with FTX. Something bad is going to happen. Maybe another war or a missile. I don't know what's going to happen. But to just, do that final dip and then the bull market starts. I think that's definitely something that could play out. Or do I have that scenario here handy? Large diagonal. Not that one. This. Can you imagine this? That is basically something that could continue the range and make that final dip. Okay, 1, 2, 3, 4, 5 in an A wave. B forms a triangle. It forms a 3-wave A, a 3-wave B. It goes up in a 3-wave C. That's why I said, guys, it doesn't matter how high this wave goes. Okay, as long as it's a 3-wave structure and it doesn't make 4 and 5, it can reject. Up, and then it makes that dip, and then the bull market starts. But this structure can take Bitcoin sideways. I know it's still very early for this structure, and I know the eliticians will tell me, devil, yes, we only start talking about structures like these once D wave is in, at least, but I'm just trying to paint out what could happen over here. Okay, that price literally goes sideways. Everyone is screaming for the top to be claimed. Everyone is screaming for the base, $50,000, $40,000, and then it just doesn't happen, and it doesn't happen, and it doesn't happen, and then whoop, it happens, and then the bull market starts. So very interesting scenario that I'm keeping an eye on. Okay, but it's going to take a lot of time for the scenario to play out, and this scenario could take us to Feb next year before the final drop to the downside. But what's nice about this scenario is it buys Bitcoin time to finish after the 0.382. When I take from the bear market low to the all-time high, 0.382 is at the 10th of November. So a structure that goes sideways basically gives Bitcoin time to finish after the 0.382. Because the problem that I have, okay, if this is okay, let me just switch this off. And then price forms, that's a A. This is your B. And then price forms a 1, 2, 3, 4, 5. Do you guys see the problem that I see? Oh, where the hell did I save that now? I literally just had it open. More macro. Here we go. Do you see the problem that I have? That if price forms a 1, 2, 3, 4, 5, yes, it can be the low. Doesn't have to finish after the 0.382, but it impacts probabilities. So I would actually like something to go a little bit more sideways to buy Bitcoin time. But that is a scenario. A, B, 1, 2, 3, 4, 5. Okay, but I would still expect price to still go higher first before the drop to the downside. I know a lot of people prefer the scenario A, B, C. A lot of people prefer the scenario. I don't particularly like this scenario. It's almost too predictive. It's too easy, for the lack of a better word. Especially if you know Elliott wave theory. It's a very easy structure, where triangle structures are usually difficult structures. It's confusing structures. Right. Pick your narrative. The overall correction duration will be longer than previous 4-year cycles. I don't believe the low is... Yeah, guys, well, you know, the low and the high of a structure is never exact to the date. It's not exactly 3-year bull market, exactly 12-month bear market. There's a slight variation. Some bull markets are 2 months early, some bull markets are 2 months late. Some bear markets are 13 months or 14 months. Some bear markets are 11 months. It's never exact. So for a bear market to end next year, February, January, is still fine. It's still within the variance. All right, based on the previous bear market durations, for history would point to a potential bottom somewhere between 5 October and 17 November. Yeah. But it can extend into December, Jan, even, and it's still fine. It can do that because that's what confuses people. Like this bull cycle ended 2 months or a month too early, according to the exact 4-year cycle theory, where people said, no, it's going to end in November. And then it ended the 5th of October. Okay, so it's never exact to the day, but you know, you can give it like a 2 months variance, maybe a month earlier or a month later, even 2 months earlier, 2 months later. It's still within the variance range. Okay, easy to trade if you range here forever. Yes, I agree with you, Puria Beat. Easy to trade if we range here forever, because I love range trading. I know a lot of people struggle with range trading. I love it. That's where I make my most money, swing failure patterns, daily levels, naked point of controls. That's where, you know, the price just goes up and down, up and down. You make money longing, you make money shorting the whole time. Rinse and repeat. So couldn't agree with you more. If you think the bear market will last significantly longer than that, you're effectively making this time is different argument. No. No, I'm not making that argument. I'm not saying this time is different. I'm saying that it is still fine if the bear market ends December, Jan. It's still fine. It's still within the variance. Okay, because remember, I can literally, guys, let's make this so that everyone is happy. Okay, let's do this. Look at how easy it is for me to change my mind. Okay, look at how easy this is. Let's do this. I move this up and I drag this down. Okay, so I think the bear market is going to end in December. Okay, I think the bear market is going to end the end of November. Okay, there we go. There we go. Problem solved. Done. Problem solved. As long as it finishes after the 11th of November. Okay. Because you guys know the drops can be very aggressive. Okay, if I take a bars pattern, let's just be silly over here. If I take this bars pattern, okay, that could be your C wave. It's possible for a steep, because people might look at this and say, no, it doesn't look right. It needs to do that. No, it can do that. That can be your C wave to the downside. and then the bear market finishes the end of November. Okay, so 4-year cycle theory, perfectly intact. All I'm trying to highlight is it can extend a little bit. It can do that, and it's still perfectly fine. 4-year cycle theory is still intact because there can be variances. Right. Legends, I am going to take a short little break. Okay, I want to just go grab something to eat quick. Bathroom break, so forth. I'll be back. Okay, I will be back. I'm going to push it a little bit longer. I'm going to dive into the smaller time frames, see how is my trade doing, by the way. If there's maybe another opportunity. Ooh, $133 in profit. The fun trade. Okay, do you guys remember the fun trade? And I'm now de-risking the position. So I just want to show everyone, yeah, this is the trade that I took. For those of you that's been in the live stream the whole time, this is the trade, the fun trade that I took. So I'm now de-risking the position. Okay, I don't want that high to be claimed again because that will increase the probabilities of taking that high. So why take a bigger stop loss? Okay, and I'm still waiting for my TP area to get hit down here. So great. It would be interesting though, okay, respond with number 1 if you did take this fun trade. Because I wasn't very confident in that trade, I'll be honest. But respond with 1 if you did take that trade. If you didn't take it, you don't have to respond. Let me know if anyone took that trade, okay, that I took, the fun little trade. That would be interesting. Because I know, guys, I wasn't very convincing with that trade, but I knew that based on the higher time frame, there's a higher chance for price to fall down. Okay, even if it takes the high again, I'm still looking for shorts. Ooh. 1, 1, 1, 1. Okay. Wow. Alex, Mariella, a lot of you actually took the trade. Well done. Well done. Mr. Cyril, well done. Plus $17. You see, okay, you guys went in light as well. Yeah, I wasn't very convinced with that trade, and that's why I also took it on my 2-bit account with low capital. But I mean, money is money. Profits are profits, okay? That profits can pay for the next 2 or 3 stop losses. 1. Just got here. Didn't know you were taking the trade, but it happened to all. But I happened to also. Oh, okay. So you take the trade. You took the trade based on your own analysis. Great. Great. I just took a little fun trade inside of the community. And you know, and that's what I want to do. Whenever I do these long live streams, I'm going to take a long or a short. And then after the live stream, we'll see whether it played out or not, just for a fun trade, especially if there's not a high probability trade for me to take. I'll always take a nice little fun trade as well. Okay. Jeroen, well done, man. The crafters 1. What is 3? You took it, you exited, and you took it again. I'm not sure. What is number 3? Fun trade, fun margin. Yes. Full profit taken. Oh, some of you closed the position already. Great. I'm still waiting for a little bit lower. And taken, but SL hit. Oh, okay. Your SL was a little bit tight then. Okay. But great, guys. Nice. So some of you made some good cash. Okay. So maybe we can eat some burgers tonight and Wagyu patty. Where is your target? The lows. It was basically, I don't know if I still have that saved. This was basically, I don't have it, I think I deleted it. This was the setup. Okay, and I'm targeting a risk to, basically I'm targeting the lows. Okay, and when I zoom into this little structure, there's resistance over there. So that was the fun trade. I basically want price to hit that resistance. But now I've de-risked my position. Okay, so if it stops me out, very little capital. My stop loss is literally $150. Okay. So from a simplicity perspective, I'm targeting the lows. That's basically my trade. I'm targeting the lows of the structure because price has already, okay, what I like to see is price has already grabbed the liquidity above the highs. So naturally, when price rejects, it goes and it grabs the liquidity below the lows. So that becomes a really good profit taking area because it can go back up and grab the liquidity above the highs again. Okay. Or it just falls down. Okay. I will definitely leave a runner. I'm not going to close the position entirely. I'll leave maybe 10% open for if it wants to fall to the downside, then I have a runner to the downside. That's how I like to manage my trades. Right, legends, I'm going to take a short break. I need a little break. Okay. And I will be back in 5 minutes. I will leave you guys with some music and I'll see you back in 5 minutes. Remember to smash up that like button while I'm gone. Okay, maybe if I can, maybe when I get back, we'll have, how many likes do we have now? We have 303 likes. Maybe when I'm back, we can be at 340. I'm hoping. Okay, and then I can stay on. If you guys, if we are by 340 likes when I come back, I will guaranteed stay on for another hour. If not, maybe 30 minutes. Let's see.
Don't wait for tomorrow's light. The sky is glowing here tonight. Every second softly calls, even echoes through these walls. There's a rhythm in your chest telling you this moment's blessed. You don't need a perfect sign, you don't need to read the lines. Just breathe it in and let it show. This is where you start to grow. Right here, right now, we breathe it in, not in the past or what has been. Right here, right now, this is a place where every dream begins its race. Right here, right now, stand tall, this is your moment after all. You don't need to understand it all, just keep moving when you fall. Every shadow fades with time, every mountain starts to climb. There's a spark beneath your skin, that's where all new roads begin. Feel the pulse beneath your feet, hear the quiet in the beat. Something greater pulling through. All of it begins with you. Right here, right now, we breathe it in, not in the past or what has been. Right here, right now, this is the place where every dream begins its race. Right here, right now,
All right, legends, I'm back. Trade is still playing out. Let's see if the TP can hit here to the downside. I'm actually going to take partial profits here to the downside. So I've just removed my TP if price does fall to the downside, and then I will take partial profits because I want to leave a runner. Okay, so I'm gonna set an alarm here at the lows so that I can take profits if it does hit that level. And now we just wait for this little scalpy scalp trade over here. Okay, it was not a bad long. For those of you that did play the D-line strategy, it was not a bad long over there, but it was not an easy long. I would say that was most probably also not easy unless you played. I mean, guys, I mean, this is scalping, okay? It's not for the faint-hearted, right? That was a better long, much better, because it gave you it gave you time to get in. That one, not an easy one because of how quickly it shot up to the upside. 1, 2, 3, 4. Now let's see how that plays out. But what I wanted to quickly talk about here, someone asked me a question, a personal question via DM. I just want to go see if I can find that question. I'm not going to mention the name because this person asked me the question in private. But basically, the question is around, if you don't know Elliott wave theory, how do you trade? Because I think because myself and Andy go through so much Elliott wave theory that people think that you can only be successful in trading if you know Elliott wave theory. And I want to tell you that that is not true. You don't have to know a single thing about Elliott wave theory to be a profitable, successful, consistent trader. You don't have to know Elliott wave theory. The reason I know Elliott wave theory is because I'm that type of person that wants to see how deep the rabbit hole goes. So when I learn something, I want to learn everything about it. If I had to learn about how to be a mechanic and how to operate an engine, I don't just want to know how to service the car and the base. I want to know how the carburetor works, the fuel injection system, how does a turbo work, how do you connect it, the battery, the voltage, everything about it. That's just the type of personality that I have. I want to know how deep the rabbit hole goes. So when I started with trading, my first successful trading strategy was the D-line strategy. The D-line strategy. And that's all I knew. Basic support and resistance as well, so that I know where to take profits and where to put my stop losses and not too long into resistance and those type of things. So the rules that I based, and Fibonacci retracement. That is what I knew. Because the Fibonacci retracement gave me profit-taking areas. If I didn't know where to take profits, I would use like the Fibonacci levels to start taking profits. Okay, 0.382 if I entered along, like TP1, TP2, TP3, because what I often found when I was trading the D-line strategy, for example, is that, okay, this is maybe a good one. If price turns around and stops me out, like I'm always waiting for the high and the high doesn't get claimed. I was in profit and now it's a loss. So it frustrated me. And then when I started using Fibonacci tools, I was like, okay, now it works better. I pay myself on the way up. I TP on the way up. I de-risk the position, and then it kept me. It switched me from break even to a profitable trader. Okay. Remember, guys, there's still a chance for price to shoot up here. Okay, and this is why if you play along to take profits to the upside, that's all I knew. The D-line strategy, Fibonacci, and support and resistance. And I was still to an extent struggling with support and resistance from a price action perspective, but I've, obviously I've mastered that over the years. And based on this little D line, I mean, I can show you guys some examples here. I just want to see if I still have it. Let's just clean up the chart over here. I just want to see something here in my folders. Okay. Look at this. These were trades that I took only using a trading strategy. No Elliott wave theory. Look at all these trades. Okay. Of which most of them were profitable. And it's basically trend lines. Okay. I call it the D-line strategy. It's basically a trend line breakout strategy. But when I introduced this strategy to the community, okay, people called it the devil strategy, and then people said, no, it's too long, let's just call it the D-line strategy. Okay, so it's named after me because this is a strategy that I introduced to the community because it's the easiest trading strategy, not knowing Elliott wave theory or anything complex. It doesn't have moving averages. I don't use RSI. I use no indicators. Okay, you can use CVD, which is powerful because when I started combining CVD with the strategy, it became more powerful. Okay, but you can see it's basically trend lines. You play the breakouts. Okay, you play the breakouts. You see a trend, you have there's rules around the strategy. So it's not as easy as just playing the breakout. So it's the strategy in combination with a checklist that I have. I have to check off certain things. Are there 3 taps? Okay, what is the general direction on the higher time frame? Is there a higher chance to take the highs or to take the lows? If there's a higher chance to take the lows again, I can still take the trade. I have to use less capital and I have to take profits more aggressively to the upside if the momentum is to the downside. So here you can see, okay, many trades taken, right? And I've only highlighted the longs here. There were shorts along the way as well. But this is some of the content that I've included as part of my trading course. This I also use to backtest my trading strategies. Okay. And beautiful short. Okay, you can play it in reverse as well. Price falls to the downside. Anyways, so all I'm trying to demonstrate over here is no, you do not need to know Elliott wave theory to be successful in trading. All you need to master is a trading strategy and not give up on that trading strategy, because most often it's not the trading strategy that's the problem. It's the person behind the strategy that's the problem. You haven't mastered the rules. You don't have a checklist. A checklist being, okay, does your trend line have X amount of taps? Are you under the influence of alcohol or drugs? Okay, are you trading on a weekend and maybe you're not supposed to be trading on a weekend? Are you trading from your phone and maybe you're supposed to be trading from your PC? Are you looking at the correct time frame? Okay, CVD, for example, could have another check to say that, well, is there bullish or bearish CVD when you're playing the long or the short? Okay, that's a checklist. It keeps you, the checklist helps you to manage your emotions. Because if you just have a D-line and a breakout and you just go wild like a cowboy every single time, you're going to struggle. You have to treat trading like a business. And it's the checklist that makes it boring. It's the checklist that no one wants to do. It's the checklist that prevents you from oversizing into a position. It's the checklist that tells you have to take profits at specific levels. The checklist is the boring part of trading, and that's the piece that no one has, the rules around your strategy. Okay, so yes, you can be profitable in trading by using a simple trading strategy. Following your rules, checking your checklist, and sticking to it. You are going to get stopped out. Not if, you are going to get stopped out, and it's about how little can you lose and how much you can make when you're right. And that is what keeps you consistently profitable. Like the one that is forming, or like the one that formed there. Look at that. Okay, you see, well, once you see them, you can't unsee them anymore. Everything is like, oh, there's a trend. Oh, there's a trend. There's a trend. Okay, like the one that's forming. Yeah. Right. The reason I discuss Elliott wave theory is because I love to challenge myself. Everyone kept on telling me, Dewald, Elliott wave theory is the most difficult thing to master in trading. And I was like, okay, well, let me start off easy. Let me do my D-line strategy first. Okay. Then I moved on to swing failure patterns. Then I moved on to range highs and range lows. Then I started studying Elliott wave theory. So I wanted to master a couple of trading strategies because what someone told me that has mastered Elliott wave theory told me is that Elliott wave theory is more powerful when you combine it with a strategy that you've already mastered. And I never understood what they meant until I understood Elliott wave theory. Then I was like, okay, now it makes sense. Okay, because how the D-line strategy becomes more powerful is that if I can count a corrective structure from an Elliott wave perspective and the breakout happens, I know that there's an increased probability to take the high. So I leave more of my position and I take most of my profits at the high. If I can count a 1, 2, 3, 4, 5 and there's a D line and it breaks out, I'm more aggressive with profit taking areas because I know it can continue to the downside because it's a 5-wave structure down. So you can see I combine Elliott wave theory with my trading strategy so that I can manage my trades better. Take either more profits, okay, for smaller movements, or leave runners with bigger position sizes for lower or higher levels. Okay, this is also why, for example, in this trade, I knew when I took this trade that there's a higher probability for price to form a higher low before it takes $57,000 and take that high again. And that is why I managed, I used a lot of the position size to manage my risk, obviously, but I've also been taking profits more aggressively to the downside. Because if, for example, if it was this short, if I played this short, I would have left more position open to the downside in hindsight, okay? Because there's a higher probability that the structure is done and it's going to fall to the downside. Anyways, it's not always perfect, okay? The best thing that I can do as a technical trader is just make sure that I pay myself, always leave a runner. But Elliott wave theory has helped me to execute my trading strategies better. But you can do it without Elliott wave theory. Does that make sense? So a lot of people hate Elliott wave theory because it's difficult. I know it's difficult. I'm still learning new things about Elliott wave theory or structures that don't make sense to me, and then I just stay away from them. If I cannot see a D line, if I don't have a swing failure line that I can trade, and the Elliott wave structure doesn't make sense to me, I stay away, I don't trade. Because at some point the structure is going to start making sense again. Because I remember during this structure, I remember it like it was yesterday, when this structure formed, when price was doing this, it was very confusing, and I think I mostly stayed out of the market inside of this zone because it was so confusing. But when price moved up and down, that's when the structure started making sense again. And then I was like, okay, diagonal, that makes sense. Wave A. Okay, 1, 2, 3, 4, 5. And then this could be a W, X, Y in a triangle, and that's why it became confusing, because corrective structures can become very confusing, and if I don't know how to trade them, I just stay out of the market. But when this move happened, I was like, okay, no, it's not a A. That is a W, X, A, B, C, and a Y. And when price got here, the structure made sense and the short made sense. So sometimes you have to wait, and only until the structure comes to an end, then it makes sense. And then I execute the trade. So often people want to trade every day. And if you're trading something that doesn't make sense to you, you're most probably going to bleed your account. And then you don't have enough cash for the trade that makes sense to you. And that's why I often, the community members know, I tell them, if the structure is confusing and it doesn't make sense, don't trade. Preserve your capital so that you have capital to trade for when it makes sense to you. Because it might make sense to me, but it might not make sense to you. And sometimes it makes sense to you, but it doesn't make sense to me. Because I know that there are people that took a lot of successful trades in that range because they knew how to trade that structure. I stayed out of it because I was preserving my capital. Okay, so I hope I've shared some insight. Okay, if the structure doesn't make sense, don't take the trade. I think I actually said this in the community not so long ago. Just checking something, yeah. I just want to see what example it was. Bearish option, almost tapped. Oh, yeah. When I entered this long, it made sense for me. I knew exactly how to manage my risk, and I knew based on probabilities that there was a chance to take that high. Okay, messy structure to the downside. I couldn't count a clean impulse to the downside. This looked more impulsive than this corrective structure. So I knew that the market could get very low and scare people out of their trades, and it can still turn around. And if I get stopped out, that's why my checklist was in place. I managed my position size so that if I get stopped out, I don't lose where I have heart palpitations, okay, by getting stopped out. And then I wrote, I am taking this trade, okay? Remember, I'm sharing how I trade, my plan, always a chance to get stopped and thus managing my position size and risk accordingly. Follow your own plan. If this trade does not make sense for you, don't take it. It's as simple as that. Because for some people, the structure doesn't make sense. Then don't take the trade. The only thing that I'm trying to do in the community is I'm sharing with people how I trade, how I manage my risk, most importantly, how I manage my risk. Because it doesn't matter which trading strategy you use, you're going to have to learn to manage your risk, regardless of which trading strategy you use. Whether you trade Elliott wave theory, moving averages, MACDs, it doesn't matter which trading strategy you use, you're going to have to learn to manage your risk. And that is something that myself and Andy hammer on all the time. Risk management, risk management, risk management. Okay. Right. And these are just some of the things that I do share in the community when I do share how I trade, how I enter. And remember, if you want to be part of the community, you can send me the word access, just the word access, to my Telegram, and I'll send you the instructions on how you can join. There's a couple of ways in which you can get into the community. The easiest way is to use one of the exchange links down below, make a minimum deposit of $500, which is your money to trade with, and it will unlock the community and the free tools for you. The CVD that I always use. Okay. Just want to see something. You can see there's still bearish CVD forming as price is trying to push up here. Okay, but let's see how this plays out. There's some bullish CVD here on blue, which is Bybit USDT. Right, and remember to smash up that like button if you haven't done so already. Hey, I didn't check. Did we get to 340 likes? Did we? Because then I'll stay on a little bit longer. Oh, 345 likes. Thank you so much. Okay, that means I have to stay on for at least another hour. Okay, right. I'm sure you guys are then enjoying the content, enjoying the education. Okay, just sharing with you how I approach the markets. Guys, I'm not a genius. Okay, I don't get it right all the time. Andy doesn't get it right all the time. But what I do get right is that I follow my trading rules. I follow my checklist. I follow my risk management. And I pay myself. I take profits. And most often, I get stopped out of a losing trade with profits. Well, basically not a losing trade. I get stopped out of when I'm wrong. I can still get stopped out with profits because I've mastered how to manage my risk. Okay, how little can I lose when I'm wrong? And often what happens is that little that I can lose when I'm wrong, I make profits. And right, so spreadsheet, I actually haven't shared this yet. Let me share this. I have updated my journal. Okay, all the trades that I've taken since the 1st of July in light of transparency. Let me make this bigger. So the latest entry is the one that is the long at the moment here on Bluffin. That little long, okay, is now included on my spreadsheet and it's still running. That short that is still running is the short that is running here. Okay, short, long, journal updated, and I every single trade that I share inside of the community, I put on here. Okay, whether it's a win or whether it's a loss, and there's going to be losses along the way. There's going to be losses, guys. It can't just stay green forever. You can see that there has been losses along the way, but I'm trying to keep them as small as possible. Okay, and I'm trying to keep my wins as big as possible, and that is what's keeping me profitable as a trader. The biggest danger, and I'm always aware of this, the biggest danger about trading is that it can take one bad trade to wipe out this entire portfolio. One bad decision, one bad moment, one wrong click of the button, one bad day, one hangover, maybe drinking beer while I'm trading or doing something stupid, and all of this is gone. Okay, so I am extremely focused when I trade. If I'm not feeling it, I go in way lighter with my positions. Okay, if it's a fun trade, I trade on a different account. My 2-bit account is my fun account. Okay, and I always make sure that I follow my checklist, I follow my rules, because I know that these gains can be wiped out in a blink of an eye if I'm just being stupid for one day. That is the thing that I always keep in the back of my mind, is that yes, it looks great now, okay, but one bad decision, one bad trade, adding to a position, moving my stop loss, believing that price is going to turn around, can wipe out this entire portfolio, either all of the gains that I've made or the entire portfolio. So I'm always aware that I'm only one trade away from blowing up this account, and I better stick to my rules. That's the harsh reality of trading. One bad trade. I think Andy shared a story with you guys as well, where he basically traded consistently profitable for 4 months, and then one bad trade wiped out all of his profits that he worked so hard to build up over 4 months. And I mean, that's devastating. You know, you're trading, you're following your rules, you're making money, 4 months, one bad decision, gone. Now you have to restart. I mean, that's why your trading rules are so important, because it keeps you robotic. It removes the emotions. Okay. Right, also diversification, guys. I don't have all my money in Bluffin. Yes, I have one of my largest trading portfolios is in Bluffin at the moment, but I also have money in 2-bit. I trade on 2-bit. I trade on Kraken. I trade on Weeks. From a diversification perspective, I don't know, guys. You never know what the future holds. One of these exchanges can go bust. Binance can go bust. Bybit can go bust. The biggest exchange, we saw what happened with FTX. Okay, I want a backup. If one of these, something happens and I can't trade with that money, I want a backup. Okay. And this is why I have multiple exchanges, and I have money in multiple exchanges. I have money in cold wallets. I have, you know, because the Luna lesson was a hard lesson. When you have too many eggs in one basket, that's a very bitter pill to swallow. Okay, and now I diversify, because you never know. You never know. Right, because I know some people ask me, Devil, why do you trade on so many exchanges? Because I do it from a risk management perspective, to diversify my cash in case shit hits the fan with one of those exchanges. Okay. What I am planning to do is maybe move some of my, you know, and I do it from time to time, guys, maybe once a month, sometimes twice a month. I do take my profits out of the accounts, move it somewhere else. Okay. If my Bluffin account becomes too big, it becomes small again, because I have to diversify my risk. Right. Okay. Are you going to take a trade? I did. Price is up and down, up and down. It looks like I'm going to get stopped. Then it looks like it's not going to get stopped. I did take a little fun trade here to the downside on the smaller time frame. It's just a fun trade, guys. It looks like it's going to get stopped. Looks like it's going to get stopped. Let's see. I think if that high is going to get claimed again, it's most probably going to take out that high. So for me, it's worth, you know, de-risking my position. I'd rather take a smaller stop loss than that stop loss. Okay. Right. The biggest areas of interest for me is still above and below. Okay, this is, guys, remember this was a fun little trade, because it can break this D line and rock and roll to the upside. Okay, it can break the D line and go up, which is another trading strategy. Stop goes below the low, you enter, you're targeting the highs, risk to reward needs to make sense. So it's not particularly a trade that I'm interested in. I'm already positioned in the long from down here. Okay, I'm already positioned in that long, so that is not a trade that I'm interested in, because I'm already positioned in the long. That's why swing failure patterns for me is so powerful, because I can get in and not worry about that stop loss. I can already be in profits by the time it breaks out. I still use the D-line strategy for if I've missed an SFB. Okay, I got stopped out, guys. I think I'm out. Yep, I got stopped out. I am out of the trade with a $150 loss. Okay, so fun little trade. Fun little trade. For August. BTC. SFB. You guys know that was... Was it that one? I can't remember. That was also the fun trade. The fun trades is not fun, okay, when you take losses. Right? It was a short. Entry was... Oh gosh, can I see it here under my order history? Average 63.8, 63, 63.8, 63, oh, 63.8, 63, loss, 150, closed. Okay, I know some of you might have made money, because I saw some of you said position protected, already took profits. Just depends on how you managed your trade when you entered. Okay, did get nice momentum to the downside, but I wanted my profit area to get hit, which it didn't. Okay, fun little trade. Another loss for this fun little trade. The higher probability trade, which is usually my winning ones, Okay. Also, there was another long that I took here. I only entered the Bluffin long. There was another long that I took over here, $1,800 that I still need to include. Okay, from yesterday, the long that I took inside of my 2-bit account also. So far the account is still in profits. But this long that I highlighted yesterday, I did not include in my account just as yet. This long, didn't include that one yet, because I took this one on Bluffin. That one I took on Bluffin, which is this one, the one that I'm in at the moment. And this one I took on my 2-bit account. So I didn't include that profitable trade yet. Okay. And so it's the loss. Okay, I will include this one after the live stream. Just, you know, just to stay transparent, make sure that I record everything, because I did highlight this trade and I took it yesterday inside of the community. Well, I shared what I was doing inside of the community yesterday. And so what I want to do here is I like to keep record of everything. That one did not play out. Fun trade. Fun trades doesn't seem to work out, but the serious trades, okay, they are doing the magic. Come on, I just want to drag you up and put you in there. Okay, now I want to see. Yeah, there was not a lot of trading. You guys can see there was not a lot of trading that happened here. There was one trade there that didn't play out. This one played out. This one got stopped out now. But yeah, before that, lots of trades here. Here I was on a break. Lots of trades over here. Okay, I keep record of everything. Yeah, somewhere on TradingView, so I can see where I took the trades, how I took the trades, and then I can go back to my journal and read the comments. How did I manage it? But I mean, look at this one. You know, I can kick myself about this one. Look at where I shorted. Ka-ching, shorted this one. Rode it all the way to the downside. That was my profit-taking area. I spoke about this in the live streams as well. Should have left a damn runner. Then I would have benefited from all that momentum to the downside. But it was still a great short. It was a great short. Okay, I still made a lot of money with that short. But, I mean, man, if I just left a runner, it would have been an even better short to the downside. But as you guys can see, you know, been a lot of trades inside of this range. Now, this is basically why I started keeping a record on TradingView from this low. Long, beautiful short. And right, most of these trades has been shared inside of the community. And if you want to be part of the community, send me the word access to my Telegram and I'll send you the instructions on how you can be part of the community. Because if I'm not on YouTube, you know, I do post what I do from a personal trading perspective inside of the community. Guys, I really want to do a private live stream, okay, this week. It's a little bit difficult because Andy is not here and I have to, you know, be inside of the community and do YouTube updates the whole time. So it's not easy to find the time to do a private live stream, you know, post the analysis and the updates and what I do from a trading perspective in the community and do a personal live stream. It's not easy, but I will see if I can find some time to do a private live stream again. Okay, because I love those, you know, that's where people can also ask me questions, trading related. We go through some scenarios together. Oh man, that would be a bummer if it rejects here and falls back down. That would be a bummer. And then there's that thing of, man, I just need to leave my stop loss where my stop loss is supposed to be. Okay, but it is what it is, guys. I'm not gonna get it right all the time. Okay. I'm happy to get stopped out with small losses and I'm happy to make big wins. Okay. It's part of the game. Right. There we go. Yeah, I know there's bearish CVD. It looks like price wants to turn around. Okay, the question is just where is it going to reject? Got stopped out of this attempt, but I mean price is still forming a lower high. Let me just clean up the kitchen. Let's go to the 10-minute. I just want to see where it tapped. Yeah, I just don't like that it's gone this high. Okay, 0.9 tap is usually a B flat target. It lowers usually. Okay, let me just do this. Let me take the 0.9 out. Put the 0.886 there. Usually, okay, when the 0.88 is tapped, it increases the probabilities of taking that high with or without a pullback. So it either takes it directly, okay, or it creates a pullback and then it takes it. But it's a rare target for a wave 2. If this is a 1 and that's a 2 and you expect a 3, 4, 5 to the downside, and for this zone not to be claimed again, it's a rare target. It can happen, it's just rare. Ugh, someone is gossiping about me. Nose is itchy. I am not interested in this short. By the way, not interested in shorting either. Yes, there's always a chance for a lower high and then price falls down. There is bearish CVD. The target is the low. But I can be picky about my trades, guys. I don't want to enter another fund trade because, I mean, based on the fund trades, that's what's costing me at the moment. Okay, I'm waiting for the higher probability trades. The higher probability trades or trade for me is the following. I can put this alarm off. The higher probability trade is this one. I want to see what price is going to do when it hits this level. If not the 1.382, the 1.618, which is in confluence with that resistance area and the point of control inside of that zone, where the most amount of volume was traded inside of that zone. So that for me is a better short based on the reaction that I'm going to see, because I can execute a swing failure strategy, which means that I can go in with a tiny stop loss and potentially be stopped out with profits if I'm wrong. So I love SFPs for this strategy over here, but that's a higher probability trade for me. If this level does not hold, no reaction, no trade, okay, a little bit further up, I'm looking at this one. Let me just extend that to the right. I know it's a big zone, but the first level that I'm watching is the 0.9. That's where I'm looking for the short, okay, because that could be your A, B, C. Now this is a really interesting trade because good chance is going to take the low and go lower. But the first level for this scenario that I would consider is the 0.9. It can go all the way up to $66,600 as long as it does not claim the 0.618. The scenario is valid. So can you see that this D line based on Elliott wave theory can fail? Okay, so this is why it's always important for me to take profits. It breaks out, your long stop goes below the low, it looks like it's going and it falls around. turns around and it takes the low again. Okay, so still interested in a short up here. It would make sense if this is an A wave, which is a higher probability 3-wave structure. It would make sense for B to get here. Because if A is a 3-wave structure, B has to tap a flat target, of which the minimum flat target is the 0.9. So if this is A and this is forming a B, I want it to get into this zone, and then I can pay attention to each of these levels. And often what happens is I trade every single level. Okay, worst case scenario, I trade every single level if there's an SFP, every single one of them. Just depends on what price it's going to do, because sometimes what it does is it does this, it rejects, I enter. I've already taken profits, I've protected my position, it goes up, it stops me out with profits or at break even or a small little loss. Just depends on how I manage the trades. It does the same thing. It does the same thing. It does the same thing, and eventually, so sometimes I can take the trade 1, 2, 3, 4 times before it plays out. But it's about how I manage my risk inside there. My trading rules is if I take 2 losses, where I've actually lost money, okay, I'm not allowed to trade for the rest of the day. But if I get stopped out 4 times or 3 times at break even or with a little bit of profits, I can keep on trading. That's part of my trading rules. Okay, because when you take, it's psychology at the end of the day. When I take losses, and usually when you take 2 or 3 losses, that's where revenge trading starts to kick in. So how do I manage that emotion? I have a rule that says I'm not allowed to trade for the rest of the day. For 24 hours, I'm not allowed to trade for the rest of the day, okay, if I take 2 losses. So it prevents me from revenge trading, and it prevents me from blowing up this portfolio, because you guys know what happens from a psychology perspective. You lose 2 trades, the third trade becomes more aggressive, bigger position size, because you want to claw back that money. No, I can't go to bed with a loss. I need to at least break even, or I need to make my money back. So to prevent me from doing that, I have rules, and that's why the rules are so important, and that's what helps me manage my emotions, because I'm still human. I can still make mistakes. I can still revenge trade. And it's my rules that prevents me from going there. Okay, hope you guys do find this content educational. Okay, it's just psychology. It's trading psychology at the end of the day. Yes, I just want to highlight bullish case. I've spoken about a lot of bearish case scenarios. W, X, Y, okay, where price still takes this low. And I do think there's a higher chance for price to take the low based on the current structure than to take the high. But let's discuss the bullish case scenario. Okay, is that price, because maybe this D line breaks and it rock and rolls, maybe this breaks out and it just flies to the upside, then I have to accept the fact that this is a 5-wave structure. I have to accept the fact that that is a 5-wave structure. It's not pretty, but I have to accept it. And sometimes it just is what it is. Okay, and I've gone into detail for those people that's only joined now. I've gone into detail as to the issue I have with this structure being a 5-wave structure. Because for something to come to an end over here, this has to be a 5-wave structure. And I'm struggling to count that structure as a 5-wave structure. So maybe the count is something like this, a W, X, Y. Okay, but can you guys see why it has to be a 5-wave structure? Because in a Y wave, you need to have an A, a B, and a C, and the C wave has to be a 5-wave structure. Okay, so now let's discuss this. If it is what it is, and this is the low, and price is going to break out and go to higher levels, well, I am positioned in the long. Okay, so I'm going to make money to the upside. I don't mind if price moves up and stops me out from the short. Then I'll look for a new short. But I'm going to make money from the long, and then I have a hedge against my short. Right, so I want price to go higher. Based on technical analysis, it tells me it doesn't carry the highest probability, but what if it does happen? I have to discuss that scenario. Okay, then I would have to come to the conclusion that this is a finished WXY. I'm sure you can count it in different ways as well. Okay, just want to see something. 1, 2, 3, 4, 5. Now, guys, I'm not going to, I know, I'm sure you can fit a diagonal. That's what I'm trying to get. I'm sure you can fit a diagonal in there as well. Okay, if you're now very creative. Okay, maybe there's a diagonal. And then there is a, where's my pen? Basically a 1, 2, 3, 4, 5. Anyways, let's just stick with the WXY and let's assume that that is the low. A bullish case scenario, I just want to look at this local structure. One, two, three, 4, 5. It's the only way I can fit an impulse in here. Can you guys see? Now you're dealing with diagonals again, which never carries the highest probability. So that for the bulls, now you're dealing with a bullish structure that doesn't carry the highest probability. Okay. Anyways, I need to try and force a bullish case scenario here, because a good technical analyst will always have a bullish and a bearish case scenario. Okay. And yeah, you guys, I have so many issues with this scenario. If this is a 1, 2, 3, 4, 5, okay, wow, that is a short correction. For this impulse, that is incredibly, incredibly short for this impulse. Unless this happens. That looks way better. Where that is 4. And it now forms the fifth wave, then rejects, and then goes up. It just structurally, it looks better. Okay, so in this scenario, this is maybe your fifth wave forming here. It rejects at that line that I've highlighted, the 1.382. Okay, 1, 2, 3, 4, 5. It corrects properly in a 3-wave structure, and then it continues back to the upside. Where will I be looking for shorts? Because I'm already positioned in the long. Okay, but can you guys see it's not looking great for the bulls. To start an impulse with a diagonal never carries the highest probability, but we have to consider it. Okay. Right. If this trend line breaks successfully, then the best short for me to consider before I'll even consider a short is a little bit higher up. And from a simplicity perspective, it is when I take a fib from the high to the low, 0.382. That's where I will consider my first short, basically claiming the liquidity above the high. So if price forms that 1, 2, 3, 4, 5, I will consider that short. But I want to see, and this is why I will analyze the structure if it plays out, okay, and I will update the community. If you don't want to miss out on any of the updates or the action, you can send me the word access. There's my Telegram, just the word access. Just send me the word access to my Telegram and I'll send you the instructions on how you can be part of the community. But this structure is going to be very interesting to analyze to make that short a high probability short. It basically grabs the liquidity above the highs and it rejects again. That could be an amazing trade. So guys, I need to consider the long opportunity or the bullish case scenario. If the 0.382, okay, it's still a bit early. I think there's still a lot of time, but what I also like to do is take trend-based fib extensions from the low of the structure to the high to this low, because now we're talking bullish case scenarios. What if that is the low and price is going to turn around and break out, okay? Which doesn't look great, but we have to consider it. Oh, I only have the flat structures activated here. Let me switch on all the levels. Normal. Extend to right. Oh, well, let's just leave it there. Yeah, so from a trend-based fib extension now, if I want to be really sniper, okay, if I want to be really sniper, what I sometimes like to do is that I know that level, but maybe I can catch that entry a little bit higher up. Okay, so what I will usually wait for is if price pushes through and it rejects from that level and it falls down, I don't have to enter there, I can enter there. And I can put, so I can have a tighter, a better entry. Okay, because I know some people are going to ask me, if price does this and it falls down and I have an entry there, people are going to ask me, but Dewald, I thought you're going to short the 0.382. Why do you have an entry over there? Well, that's why. Because I treat those lines as swing failure lines. So if it wants to push through and grab more liquidity to the upside, I can get a better entry. Okay, obviously, if price turns around and rejects, I will move this fib down. So I need to use the lowest point of this structure for this fib extension. So I have a low, I have a high, and this based on current price action, that's the low. If price turns around and falls down again, then I will adjust my fib levels. Just from an education perspective, I don't leave it there if price falls to the downside, then I still use the same levels. You have to adjust the fib. Okay. Yeah, it's not great, guys. Now, bullish case scenario is in diagonal territory again, okay? Because I can't count this, okay, as a high probability impulse. Okay, so guys, what I want to see, I have so many levels. Let me take this out. I need to see this. Best impulsive structure, okay, or I need to see. I'm not going to do that. I need to see 1 2 1 2 3 4 5 4 5. Okay, you basically have that contracting, and you have the repeat to the upside, and you have the move in the middle with high amount of volume. These two are the most common. They happen most of the times when price reverses. Nested 1-2s and a clean impulsive structure. 4 doesn't go into the territory of 1. Most amount of volume in the third wave. Takes the high again. 3-wave corrective structure. Continuation. Okay. The lowest probability impulsive structure is a diagonal that I've just shared now. Oof, that's so ugly. Let me just do this. Okay. Where there's overlap. You have a 1, a 2, a 3, and the 4 goes into the territory of 1, and then it makes a 5. Now that one is also an impulsive structure, which is also referred to as a leading diagonal, but it never takes the highest probability. So to start, when price falls and price does that, it's almost, there's a much higher chance that price is going to take the low. And it's usually a corrective structure. Most of the time, not always, and that's why we still consider them, because they can be leading and they can be bullish. And now this is what you're sitting with right here. So Can I count a clean impulse? No, I can't. 1, 2, where's 3, 4, 5? There's overlap. Can you see there's overlap? So the only structure that I can consider is a diagonal. So not a great start for the bulls. Maybe nested 1-2s. That's now the other bullish option, because a diagonal can be disguised as nested 1-2s. Can you see over here? So maybe that's another bullish option. Okay, 1, 2, 1, 2, 1, 2, boom. 3, 4, 5, 4, 5, 4, 5. Because now that is a cheeky little bugger. Because now that is something that could happen over here. Okay. 1, 2, 1, 2, 3, and it just rock and rolls out of here. But then it's just going to fly, and I'll look for that short on top, and I'm going to benefit from the long that I'm in at the moment. Okay, so very happy to be positioned in this long and leaving a runner. Okay, now nested 1-2s carries higher probability than a leading diagonal. Okay, I hope you guys are enjoying the education, the analysis. Let's go through some comments. Guys, I'm going to spend a little bit more time here on the comments. I feel like I'm skipping a lot of comments, so I just want to read some. Nah, chill, devil. I feel like it wants to go higher. Spot still buying. I'm short. I hope it goes to 64,500. Yeah, that is also a zone where I want to short from. Okay, because I put take profit there. Oh, you're in the long. You want to take profits there. Great, great. Can you do Elliott wave on what's happening on low time frame? Well, yeah, this is low time frame. 5 minutes, 15 minutes. I don't like to do Elliott wave counts on smaller time frames. I will if I have to, like when I'm figuring out if that is a 5-wave strategy, I will go into the smaller time frames, but 15 minutes is my preference, my minimum time frame. It's also my minimum time frame for me to place my trades. Okay, another scenario could be, like I said, guys, that could be another scenario. Five moves over there. It's done. And this is part of a corrective structure. This is A, B, C, then it breaks out. Now that looks better as a corrective structure because, you know, it has better symmetry. Impulse, correction, continuation. Okay. Worst case scenario is that this is an ending diagonal in a C wave. Do I still have that scenario? Yeah. Ooh, here we go. Here we go. Look at this scenario. No, not that one. I have kind of messed up my folders with... Here we go. I can take all of this out the way. Okay. Here's your bearish case scenario for a diagonal. 3-wave structure in a W, A, B, C in an ending diagonal. 1, 2, 3, 4, 5. And then price falls to the downside. There's your bearish case scenario. Price rejects at the trend. Always a bullish and a bearish case scenario. Always. Okay. If the structure is done like such, and that is your 4, I don't want that high to be claimed again. Okay, if it does claim the high, there's still a potential for rejection in this zone, because then I have to, like I said, then I have to move 3. Damn it, this magnet can become irritating. And then maybe it does a bigger, okay, it forms a bigger structure. Where I'll be looking for the short in this zone. 0.618, 0.786. When I take a fib from the low, well, it depends on, yeah, from the low to that high. Okay, but guys, if I do jump into a fresh short, I will let the community know if I'm not on this live stream. Okay, if it doesn't happen in this live stream, I will let the community know if I do jump into a short a little bit higher up. Okay, it's a very interesting zone for a short. Very interesting zone for a short. Clear invalidation. Okay, because most bullish case scenario is nested 1-2s. Bearish case scenario is that this is a 1, 2, 3, 4, 5 and a C wave. It rejects and it falls down. So still very interested in shorts. Okay, although I'm already in a short on my Bluffin account, I will take this trade on a different account, maybe 2-bit. Okay, trade back that loss that I made today. This little loss, just trade that back today. Anyways, like I wanted to say, guys, for me, these are the higher probability trades. Okay, the one that I took here during the live stream was the fun trade. What's the difference between a rising wedge and a leading diagonal? It's actually the pattern, the rising wedge, actually stems from Elliott wave theory. So it's the same thing. Is the rising wedge going to break up? Because I'm not sure if you've studied a rising wedge pattern, okay, you will know that they say that if it breaks to the upside, because the probabilities are higher that it breaks down, a rising wedge. A falling wedge has a higher probability to break up, okay? But if it does the opposite, it's usually massive in that direction. I don't know if you've ever studied rising wedges, because it originates from Elliott. Most patterns actually comes from Elliott wave theory. Okay, it's just little extractions. But if you have a rising wedge, okay, and price is doing that inside of the wedge, the probabilities are always higher to break down. And in Elliott wave theory, it's exactly the same thing. 1, 2, 3, 4, 5, wave C and an ending diagonal, always a higher probability to take the low. So what they then teach you in a rising wedge is to say that, but if it does break out, it usually accelerates to the upside. And that is your nested 1-2s. 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5. So it's basically a snippet of Elliott wave theory that they've condensed into a pattern. So it's easier for people to understand the pattern than the theory behind the pattern, which is combined with Elliott wave theory. Bull flags comes from Elliott wave theory. Head and shoulders comes from Elliott wave theory. What is a head and shoulders? Do you guys know what a head and shoulders is? Okay, people look for them at the wrong places. This is why I hate these patterns when people talk about them, because they look for these patterns in the wrong places. And this is why Elliott wave theory was so interesting to me, because I realized that the patterns are inside of Elliott wave theory. And if you know Elliott wave theory, you know where the pattern becomes the most relevant. Okay, so let me show you an example. Okay, that's your 5-wave impulsive structure, right? This is your corrective structure. Normal ABC. Let's keep it simple. A, B, C. Do you see the head and shoulders? Okay, there's your neckline. There's your head and shoulders. And then the C wave breaks down. Okay, and that's usually the measurement that they take from there to there. It originates from Elliott wave theory, but a head and shoulders is relevant when I can count the 3 and the 5. That's where the head and shoulders becomes relevant. People are looking for head and shoulders here, and they're looking for head and shoulders there, and they're looking for head and shoulders there, inside of that structure that is still moving to the upside. Once it gets to the top, then the head and shoulders becomes relevant, and this is why a lot of people think that patterns fail and they're not reliable, is because they are applying the pattern in the wrong structure. Okay? So for example, if I take it back here to the price of Bitcoin on the 12-hour time frame, if you look, let me just switch this off. If you look at the entire bull market here to the upside, where would you think that a head and shoulders is the most relevant? At the top of the structures. 1, 2, 3, 4, 5. That's where you look for the head and shoulders. 1, 2, oops. Okay, but basically at the top, that's where head and shoulders becomes relevant. Head and shoulders becomes relevant. Head and shoulders becomes relevant. And from an Elliott wave perspective, I would be like, okay, 1, 2, 1, 2, 3, 4, 5, 4, 5. Now it forms that head and shoulders. Can you guys see there? Okay, you can kind of squeeze it in there. Not the prettiest one, but there's your neckline. Yeah, I mean, you have to do something like this, okay? They're not pretty. That one is not pretty, but they are usually at the top of structures after you can count 5 waves. That's what I'm trying to get to. Okay, so the easiest way for me to explain it is basically you're on, you know, using my little, I deleted it, my little drawing. Okay. I just want to see here something on the 15-minute or 5-minute. You see, now this one as well. Okay. 1, 2, 3, 4, 5. Now you look for a head and shoulders. Now you look for head and shoulders, and it breaks down at the top of the structure. But I need to be able to count the third wave with a high amount of volume. Fifth wave creates lower volume. Then you look for your head and shoulders pattern. But you can't look for head and shoulders there. You can't look for head and shoulders there. You need to look for them where they make sense. And this, in the community knows, I hate the head and shoulders pattern because people apply them in the wrong places. It's not that they don't work. They won't work if you're looking for head and shoulders in the wrong place. So if you know Elliott wave theory, you know where to look for the head and shoulders pattern. Okay. Right. Devil, please do a poll for bearish and bullish. Dump it. What is CVD doing? Let's do a little bit of a refresh over here. By the way, guys, if you can't see which line is showing the bullish and bearish CVD, you can click on the question mark or on that line and it will show you. Okay, it's on Binance that it's forming bullish CVD at the moment. Okay, it shows you here the line. On the Binance line, the orange line, it's creating bullish CVD between those two pivots. I don't see bearish CVD. Bearish CVD locally, I don't see any bearish CVD. There's bullish CVD, the target is claiming the high. You can see all of this bearish CVD and bullish CVD played out. When it has a tick, it played out. Price pushed up, moved down, bullish CVD, target is the high, price took the high. Price continued to move up, made a higher low, Bullish CVD, target is the high, price took the high. Great. Okay. Bearish CVD, target was the low, price took the low. There was also bearish CVD, continuously the lows got taken. And now there's bullish CVD forming against those two pivots, and the target is the high. If you guys want access to this tool, it is this link here down in the description. Okay, free tools. If you want to unlock all the features that this tool has to offer, especially here, because I use CVD on the 5-minute time frame, you might not get all the time frames for the free section. You can sign up with one of my affiliate partners, which do offer the best deals at the moment. Make a minimum deposit of $500, which is your money to trade with, and it will unlock the tool for you. Okay, you just follow the steps inside of the tool. Ooh, what is happening? Mr. UAE, you again. What a legend. Every time he's in the live stream, he sends membership gifts to everyone. Every single time, Mr. UAE, much appreciated. And I'm sure the community appreciates it as well. There's a good thank you so much appreciated. There's a good example end of April into early May. Are you talking about the head and shoulders? Yeah, it's a reversal pattern. And that's why it forms at the bottom and at the top of structures. And if you know how to count the structure from an Elliott wave perspective, you know where to look for them. Not, yes, guys, I used to see people posting head and shoulders everywhere. It's like head and shoulders, yeah, head and shoulders, yeah, head and shoulders, yeah. It's reversing us. I'm just like, no, it's not going to play out because I can't even count 3 waves up yet. Why are you talking about a head and shoulder structure? Okay, Devil, if you want to count wave, if it's 3 or 5, or check structure, which time frame you use, I mostly use the 15-minute and 1-hour time frame. Remember, Elliott wave theory becomes easier the higher the time frame. A lot of people, the biggest mistake a lot of people make is that when they start off with Elliott wave theory and they start studying Elliott wave theory, they go too small in the time frames. When a structure is confusing, zoom out, not in. Okay, people do the opposite. Zoom out. If you're doing Elliott wave analysis on the 15-minute time frame and it's confusing, go to the 1 hour. If it's still confusing on the 1 hour, go to the 4 hour. Okay. If a structure is confusing and you're going into the 1 minute 30-second time frame, you're going to confuse yourself even more, especially if you are not experienced in Elliott wave theory, because you can get analysis paralysis and then you don't take any trades because you don't know what's going on. So yes, 15-minute or higher. 15-minute, 30-minute, 1 hour, perfect. I love those time frames for me to do my Elliott waves analysis. And then because I'm experienced in Elliott wave theory, if something doesn't make sense for me on the 15-minute, I will sometimes jump to the 5-minute just to check, is it 5 wave, is it 3 wave? Okay, it still doesn't make sense. Then I go to the 1 hour, check out the 1 hour. But the higher time frames has always served me very well. When something looks confusing on the smaller time frames, the higher time frames have very seldomly disappointed me. Okay, because here's a perfect example. On the 1 hour time frame, okay, I can clearly see that this is not a 5-wave structure. And sometimes you just need to trust the higher time frames. 1, 2, 3, 4, 5. Or 1, 2, 3, 4, 5. There's a problem. There's a big problem. Third wave is the shortest. There's a truncation. It needs another leg here to the downside to be a completed 5-wave structure. Okay. Anyways, I've gone through this in a lot of detail, but often the higher time frames have served me well, especially for impulsive structures. So I can see here on the higher time frame, which is the 1 hour time frame, that is a 5-wave structure. 1, 2, 3, 4, 5. Beautiful. makes sense on the higher. When you go into the smaller time frames, you can count all sorts of things. Oh, is it a 1? Is it a 2? Why can't I see 5 waves inside of wave? You can confuse yourself, and sometimes the higher time frame is all you need to see if the structure makes sense. Right. Did price tap the 0? Yeah, price did tap the 0.9. It's not common to see a flat corrective structure after a diagonal. Okay, if this is a 1, 2, 3, 4, 5, and 5 ended over there, it's not common to see a flat corrective structure. But let's see. It's not invalid. It can happen, it's just not common to see it. There was another one over here. Do you guys remember this structure when I did a live stream and I said, or I think I posted it inside of the community, this one? I think it was this one if I'm not mistaken. Yes. I told everyone, I think I posted it in the community, I can go look for that post. I told everyone I am not interested in a long. I did a live stream as well, yes. And I told everyone the only time I can be very picky, I know that leading diagonals takes low probability. Okay, if this is a wave 1 and it's going to form a wave 2 and shoot back to the upside in a 1, 2, 3, 4, 5, I don't like that. So I can be very picky about my long. And I told everyone, do you guys remember, for those of you that were in the live stream, I said the only long that I will consider is an SFP from this low. And price didn't SFP, I didn't take the trade. And I told the community as well, I don't like this trade because of that structure. And I think there's a higher chance that price is going to take the low, which it did. Now again, look at that. You're sitting with a damn another diagonal. So for me, there's an increased probability because of this structure that it's going to take the low again, unless it's nested 1-2s. And that rising wedge story that I've just told you, okay, it could really accelerate to the upside, but I will be ready for that short. I want that short because I'm going to make money from my long, and I want that short. It's going to be absolutely amazing. Okay, but obviously, guys, I will keep the community up to date. As always, if you want to be part of the community, send me the word access and I'll send you the instructions on how you can join. Because when I'm not on YouTube, that is where I share everything that I do from a trading perspective. This is my journal so far since the 1st of July. It actually goes way back, as you know, when I shared my positions, all the trades that I've taken, it does go way back. I've just started keeping record from the 1st of July up until now, the 4th of August. Today got stopped out with $150, but overall the portfolio is still doing very well. Okay, so very happy with the trades, and of which most of them have been shared inside of the community, if not all of them. This one wasn't shared in the community on Saturday, but there was a re-entry on Monday, so I'm counting this as being shared in the community because there was a re-entry on Monday. SFP from the daily, price came back down to that daily and shot up back to the upside. Okay, I took this trade over here. Price came back, took it again yesterday. So although the Saturday one I didn't share, the yesterday one I shared, and it's basically the same trade. Price came back to the same level. Right. All the gifts, all the gifts. Ooh. Okay. How long time are you in trading, Devolt? I've been trading since 2017, but I only turned profitable. Let me not lie, guys. This is where I turned profitable. I know the structure. Let me go and show you where I turned profitable. I turned profitable during the zone. This is where I turned profitable as a day trader. during the bear market. That's where I turned profitable. I was learning. Obviously, guys, made a lot of money here to the upside. Okay, that's what gets you hooked. Made a lot of money to the upside. I've been doing investing in Bitcoin and Ethereum since 2017. Been studying my D-line strategy. I thought I was an absolute pro. Like, oh God, trading is so easy. Who doesn't know how to trade? Okay, and then this happened. And I was like, oh shit. Okay. But then, yeah, a lot of effort, long nights, long hours, perfecting my D-line strategy, which I basically played in reverse. I played my D-line strategy in reverse. I flipped the, I remember I used to do this. I used to flip the chart around and pretended that I was playing longs just to make it make sense to me. Okay, I was playing longs to the upside, but just pressing short when I entered the trades. And, yeah, those were the days, but I basically turned profitable. Yeah. So May of 2022 is when I turned profitable. Yeah, I was break even. I would say during this zone, I was break even. Okay. Luna lost a lot of, guys, I have my story on my YouTube channel. Okay. How I started and stuff. Lost a lot of money with Luna, FTX, all the crap. Okay, but from a day trading perspective, this is where I learned. This was my, you could say this was my learning curve. This was my learning curve. When, you know, when I learned how to master my D-line strategy, I started with swing failure patterns. So yes, I started, I turned profitable because I think a lot of people can tell you when they started trading. I started trading in 2017, but I only turned profitable in 2022. And then I made a lot of money during all of this. I made a lot of money during all of this and all of this year to the upside using my trading strategies. It's not easy to turn profitable in a bear market, but hey, you guys are here and it's bear market. Okay, this is where you learn how to do it properly. I believe the people that learn how to trade in bear markets are the people that turn trading into success, because damn, if you can trade a bear market, you can trade anything. And if you're learning how to trade in a bear market, you're basically learning under the worst conditions possible to manage your risk, follow your checklist, do everything that you're supposed to be doing. Because the bull markets give you a false sense of hope. It makes you believe that you are a great trader because a rising tide raises all ships, and it doesn't matter how shit your entry is, you just keep on winning the trades. So it gives people a false sense of hope, a bull market. A bear market, man, if you can learn to trade a bear market and you can turn profitable in a bear market, you got your shit bedded down. Okay, for those of you that did leave their stop losses above the high, congrats, because it looks like it wants to retrace here to the downside. Okay, I de-risked my position, got stopped out. But thanks for the question. That's a good question. Okay, a lot of people want to know these things. Yes, hello. Love the gift. Okay, Elliott Wave, 1 minute. Chaos indeed. Yes, and I always, the community knows as well. When I post an Elliott Wave scenario on the 1 minute time frame, I usually write the following: 1 minute stuff. Let's see if it's going to play out. I don't give it any priority or probabilities or anything like that, because there's a lot of noise in the smaller time frames. Okay. I don't think we're going to have time to do that. Thank you. I just received a membership gift. How that works, I'm not sure. I think you need to accept it via your email. Maybe you got something via your email. I'm out, boys. Finally got into the community. Matt, hey, welcome, man. I'm sure I'll see you inside. If you do have any questions, you can ask. If I don't answer, okay, you can tag me if you want to ask me questions. But if I don't answer, oh God, did you just shower the people with another? Oh, I'll get to that now. But yes, welcome to the community. Okay, that is where myself and Andy and the coaches try our best to teach people how to fish and not give them fish. Okay, could you analyze ETH BTC pair? Guys, we know what that pair looks like. Okay, I will go and see if I can check it out, but yeah, so many double I just want to go through the super chat tweet. I lost loads of Luna. Market M, yes. I think there's a lot of us, if you've been around for long enough, I think a lot of people lost money with Luna, because the biggest mistake I think I made with Luna is, firstly, I had too much money in there. Secondly, I locked it up in the Terra wallet, and you need it, I think, if I remember correctly, 31 days before it unlocks. So I saw the crash and there was nothing I could do. Nothing. I couldn't withdraw it because it was locked. And I just saw it go to zero. And I was like, fuck. Wow, 5 years. Devil, when you think we buy so hard. When you think we buy so hard on the 0.61 or a little bit lower like the zero. Thanks for the super chat. UAE. Are you talking about the higher time frame? Because on the higher, are you talking about this local structure? Are you talking about the higher time frame? Because on the higher time frame, I would actually prefer a deviation, because that's what I see most often. So let me just take all the stuff here out. Yes, guys, I'm just going to delete all of this. Okay, clean up my folders. Delete. I don't need any of this. Okay. Delete. Sorry, guys, I just need to clean up these folders because it's driving me insane. So I just want to make sure if you didn't respond. Do you have Elite Wave idea about Shiba Inu idea? Well, anyways, beautiful education. Love it. 100 out of 100. Started trading the bear market. Okay, we'll go through that now. Let's go to the 4-hour time frame. Let's switch this off. Okay, so inside of this range, I'm not sure, UAE 87, if you're talking about this range. Okay, I would prefer the 786. I would prefer the 786. I might not get it, but I prefer it. You also have the point of control inside of this range. So this range that formed over here, you have the point of control together with a 0.786 high volume node that can provide support. Because I think there's a lot of people looking at the value area low. When you do the range for this consolidation area, there's a lot of eyes on this level. A lot of eyes on this level. And usually price gives you a deviation. So it could give a deviation below. It could do the same thing. And then move back up. So I would prefer for price to deviate below the range low, scare people, because that usually scares people. And for me, the best zone is $59,700. If this is your question, okay, on the higher time frame, for me, that is the best longing zone over there. Look, make no mistake, I will keep the community up to date because it could bounce at the value. It's just there's too many eyes on that level. Range traders, they keep an eye on these value area highs and lows. Okay, that's where they're looking for the bounces. But look, it did reject. Look at that. Beautiful rejection from the value area high, but then it took it and broke out. Now you're like, oh shit. It's not as bearish as I thought it's going to be. It's actually breaking out, and then people exit their trades. Okay, it scares them out of their trades. So you can imagine if price had to do the same thing. Okay, it's psychology at the end of the day. It's market psychology. Is you can imagine if price had to do this, and it bounces, okay, and it falls back down. Oh shit. It's more bearish than what I thought. Okay, it's losing the value area low. So all of these longs gets stopped out, or they exit because they're scared. It's going to pop or it's going to break down, and then it bounces. So from a psychology perspective, these little shorts and longs are very interesting to me. Okay. Remember to smash up that like button. As always, guys, if I'm not on YouTube, I'm inside of the community. Andy is taking a little bit of a break this week. It's also his birthday week on Wednesday. It's his birthday. So I'm inside of the community if I'm not inside of YouTube. And two nice little trades that was shared yesterday inside of the community. The long and beautiful long, by the way. A scary long, okay? But it did not take out the low. That is the long that I highlighted yesterday in the community. It's basically this little position, okay? That one over there that played out to perfection. D-line breakout, higher low, ever so slightly, chance to claim the highs, and impulse up, three-wave corrective structure, price took the highs. Beautiful trade. And then that short was highlighted last night, which is now about to get stopped out. Okay. I did actually say, guys, if you did not pay yourself with that short, I did ask nicely. Okay, I did ask nicely. Where did I say that? Did anyone take this short? I missed it. I'm glad to see some of you got in. Please remember to pay yourself. You know the drill. The drill is cover fees, cover your stop loss, take profits. Because you never know what's going to happen. You might think that this is going to reject and just fall to the downside. And then it does what it's doing right now. And then it does this. You didn't take profits, and now you potentially are going to get stopped out with no profits. So still a valid short, very valid short. It's just how you manage your trade and how you take profits. But I know the community members by now. I know the community members. I see in the money shots, people are absolutely killing it inside of the money shots. Guys, you are absolutely killing it. Mr. Dylan doing altcoin trades, okay? And someone took that short, beautiful, okay? Anyways, guys, you guys are absolutely nailing it. This is madness, right? Absolutely nailing the trades. I love it. People are also sharing their losses, to show that no trader is perfect. You're going to take losses along the way. I love it when people share their losses, and also if they made a mistake, because you know there's a loss where you totally just effed up, and then there's a loss that doesn't matter how you traded it, you follow your rules, you're just going to get stopped out, and that's fine. Okay. Took 25% less, left the rest to right. Great. You see, now this is what I love to see when people pay themselves. Okay, because you never know what price is going to do next. Holy shit. Mr. Wherever you are over here, P&L over 7 days, 127%. Oof, that is insane. Okay. Anyways, guys, it's just a little bragging section for people to show off their, you know, their trades, but also share their losses. And their struggles, where they're struggling, and then yeah, that's basically inside of our community. High about to get claimed. So the level that I'm watching, the first level that I'm watching now, is because I can see price is breaking trend, is this one. You guys see the red line? Just want to see if it has confluence with this. It's basically the 0.7. A little bit further up, the 0.61, the 1.618. So as price is pushing up here, I'm interested in these two zones for a short. I will consider the 0.88. Well, I'll actually consider the 0.9 as my first target if those ones don't hold, because of the flat. So that's where I'm looking for the short. Now that for me is a higher probability short because price is pushing up on decreasing volume. Decreasing volume and price is pushing up. So for me, I'm looking for a short in this zone. Oh, is there a daily? Yes, you're right. You're right. Forgot to switch on the daily levels. Oof, I mean, that is, I spoke about this during the beginning of the live stream. Okay. 0.786 daily level, 1.618. Point of control of this entire range. There's also a point of control. There's a lot of confluence happening over here. A lot of confluence. Okay. So it's either going to front run it, or it's going to scare the shit out of everyone. And it leaves that wick behind. It leaves a wick, you know, that wick behind. And then it starts trading back below, which is a sign of weakness. So there's a couple of ways in which I can get into that trade. Either the SFP or the SFP over here if it front runs this zone. But yeah, there's a lot of confluence in that zone. A lot of confluence, but I will probably be asleep knowing my luck. I also miss trades while I'm sleeping, guys, and it's frustrating when you wake up and it's like, I've waited 3 days for this trade and I was asleep when it played out. It's frustrating, but it is what it is. There's always another trade around the corner. You saved me many times from liquidation, Devolt. Blast. Pleasure, man, pleasure. All I can do is teach people about risk management. And it's up to you to, to implement it and make it part of your trading strategy. I TP'd and ran away before the police came. Great, great. Mr. Cyril, who is better trader, you or Andy? Guys, I can't say. Okay, Andy always says I'm better, and I always say Andy's better. So, okay. I don't think there's a better trader. We are different traders. Andy has a slightly different style of trading. I have a different style of trading. And I think the great thing about the community and watching these YouTube live streams is that you get a little bit of both of us. And you can take whatever you want from me and you can take whatever you want from Andy and combine it. Because I do have a slightly different style of trading than Andy. And Andy has a different style of trading than me. For example, Andy doesn't like D-line strategies. He hates them. He says it, because he loves swing failure patterns and he's really good at swing failure patterns. I love D-line strategies, or the D-line strategy, because it's my first profitable trading strategy if you know how to use it correctly. And because I've played hundreds and thousands of D-line breakouts, I know the rules around them and I can stay profitable with the D-line strategy because I've played so many of them. Andy doesn't like to trade from fib extension levels, but he does sometimes do it. Okay, where I love trend-based fib extensions, and the community knows as well. When Devil has a fib extension, pay attention. Okay, well, I pay attention at least. Because that was a beautiful short from the 1.236 together with a 0.618. Now you build confluence. You have two Fibonacci levels in confluence, almost perfect alignment, like Pluto and Mars and Jupiter's in perfect alignment. You have the 1.618 with a daily level and the 0.786. So I use it as an SFP zone. Okay, you have also the point of control inside of that zone. So guys, I can't tell you who's the better trader. I will most probably say Andy. And Andy will most probably say me. But we have different styles. Right, legends, remember to smash up that like button. If I end the live stream and price is not where I want to short from, I will obviously update the community if I do jump into a short. And as always, if you want to be part of the community, send me the word access. There's my Telegram and I'll send you the instructions on how you can get in. Okay, for those of you that keep on asking me, Devold, what are these amazing deals from these exchanges? I'm just very briefly going to show you, very, very briefly. literally 30 seconds. Because guys, I get this question so many times in my personal DMs. Okay, so many times. Exchange offers. First up, weeks. $15,000 USDT welcome bonus. You obviously just need to read through the T's and C's. When you select the link, you'll get the T's and C's. Okay, how to qualify for the 15,000 welcome bonus, up to $100 coupon just by including your email and your phone number. And the more you deposit, the more you get free money deposited into your features account that you can use for trading and fees and losses. The more you trade, the more money gets airdropped into your account. That's basically the week's offer. Bluffin, amazing at the moment. Okay, 30% fee discount. You get VIP 3 for 7 days. Then last one, 2bit. Win $8,000 in rewards and exclusive VIP. Register to get $30 features bonus just by registering. You get VIP status 1 for a month, which means you have reduced trading fees. Okay, if you place one trade, you get an additional $30. Then the more you deposit, the more money gets airdropped into your account. The more you trade, the more money gets airdropped into your account. So I also hold some spot in 2bit. And those are basically the deals. So basically, when you sign up with one of these partner affiliates, you make a minimum deposit of $500. This is one of the ways to get into the community and unlock all the free tools that I use from a day trading perspective. Okay, there's a lot of things in here, guys. You can go scratch around. Liquidity, heat maps, CVD, economic calendar, fear and greed. It's all there. Okay, but it's basically everything that I use from a trading perspective. So if you make a minimum deposit of $500 using one of my affiliate exchange links, which is your money to trade with, you're not giving that money to me, you get access to the community and to the tools. A lot of confluence. Love from India. Welcome to the live stream, man. New to your channel, learning a lot watching your live streams. Thanks for your time. Elon 442, absolute pleasure. Our channel, myself and Andy's channel, is aimed at education, where we try and teach people our best. We try our best to teach people how to trade properly. Okay, whether you like it or whether you don't. I think the people that don't like it are usually the people that want signals. They just want someone to tell them where to enter. They hop from channel to channel to say that, oh, okay, this guy is talking about a long, let me long. Oh, this influencer is talking about a short, let me short. There's a lot of channel hoppers that just look for signals. Okay, yes, I do share opportunities that I'm looking at, where I want to short and where I want to long. But most importantly, when price gets there, it's how I execute that trade that keeps me profitable. Because when I'm wrong, I can still be stopped out with profits. Okay, and this is why I keep my losses small and I keep my wins big. That's how I stay consistently profitable as a trader, because I know some of these trades, these ones over here, I think these two, I can't remember, I think there was 3 of them. I got stopped out with profits. I was wrong in my analysis, but I got stopped out with profits because of how well I manage my risk. And most of my trades was using SFPs. There I actually traded Elliott Wave. Okay, lower high, got stopped out. Anyways, I will keep on updating this and share it in light of transparency with my community. Yeah, I think there's a good, it's so close to the high, it's a good chance to claim that high. There's local and bullish CVD fighting against each other. Okay, easy way or easier way is, remember guys, price can swing that high and reject. It could literally do that, and it front runs all these levels. Okay, so I'll be paying attention. I don't like it. I like for price to get to my areas of interest. And often if it does that, I will miss the trade. And I'm happy to miss a trade. I'll look for the next trading opportunity. Because I know this daily here at the bottom, it got front run so many times. And I got so frustrated with this damn daily level that got front run. Do you guys remember this daily level here at the bottom? Ooh, I now need to just clean this up. Delete that. Okay. Daily time frame. There was a daily level here. Let me just clone that. I think it was this one. Was it this one? It was this one. Yeah, it was that one. This damn daily level frustrated the hell out of me. This daily level. Okay, I was looking at this structure as 1, 2, 3, 4, 5. I was ready for that long. I shared it inside of the community as well. What did price do? Turned around before it hit it. Again, price came down. What did it do? Front run my level. Ready for that long. And then finally on Saturday, it hit its damn daily level, and that's where I entered the long and bluff in. So I had to wait a long time for this level to get hit. So it's not to say that price is just going to get to this level straight away. Okay, maybe it's going to, and then maybe it goes up again and then it hits it. Okay, it's not to say that it's going to hit it directly. If it does and there's a nice little reaction at the daily level, make no mistake, I will enter a long, like a short. Okay, I want to see that reaction, exactly what happened there. Right, legends, remember to smash up that like button if you do enjoy the content. Just want to see how many likes do we have. 400 likes. You guys are absolute legends. Okay. Right, legends, I have unfortunately run out of time. It's been 5 hours and 16 minutes. I've got some other things that I need to do. I can't wait here forever. I don't know how long it's going to take for price to play out over here, but if you are inside of the community, okay, I will set my alarms right after this live stream. If my alarms go off, I will pay attention, and based on what I see, I will share inside of the community what my next short could or could not be, or whether I'm going to enter it or not enter it. So thank you so much for staying with me. For those of you that's been watching for 5 hours, diehard fans, thank you so much. I appreciate it. Much love to everyone. Have yourselves an amazing Tuesday. I will see you, the community members, tomorrow. And I'm deciding whether I want to do a YouTube live stream tomorrow or not. So, because I'm tinkering with the idea, maybe I do a private stream only for the community tomorrow, but maybe if I do a YouTube video tomorrow, it will be a short one, okay, and then I'll spend more time inside of the community tomorrow. But have yourselves a blessed day. Until the next one, thanks for staying online with me, and I will see you in the next one. Cheers for now.